Everyone, and happy Monday. A minute to go until the start of cash equity trading on Francine Lacqua in London with Tom McKenzie.
And here are your top stories. Global stocks jump after Wall Street's best day in more than a month amid optimism over China's reopening and slower rate hikes. Will the Fed need to rein in expectations once again? Brazil insurrection. Security forces regain control after thousands of supporters of former President Bolsonaro ransacked government buildings in the capital, Brasilia. Plus, sources say Goldman Sachs will embark on one of its biggest ever rounds of job cuts this week, with plans to slash about 3,200 jobs.
Tom, let's take a look at the futures. We're definitely risk on, and we're expecting actually a lot of that optimism, not because of data, because data was pretty ugly, but the optimism on what central banks will do. The optimism that we saw in Asia actually filtering through to Europe with DAX futures gaining 0.4%.
Yeah, on your point around the ugly data, bad data, good news for these markets, it seems, with the ISM print coming in much lower than expectations, really plummeting. And that, again, supporting the view that maybe the Fed steps it down when it comes to that meeting in February to 25 basis points. Markets currently pricing in about 32 basis points from the Fed in terms of the next rate hike, but we'll see how that evolves, of course, across these sessions. The Asian session, we'll get to that shortly, currently in a bull market. Currently in the FTSE 100 with the open of 0.1%, just gaining 11 basis points, 11 points. The Spanish IBEX down 0.1%, and over in France, range bound. Give a few seconds to see how the pricing reflects what is happening in terms of a very strong session in Asia, and of course that handoff, given the rally that we saw on Friday out of the US. Let's switch it on and see if that is likely to continue as we look to the future stateside, and then I'll unpack a little bit about what's been happening in Asia. So the MSCI Asia Pacific, again, in bull market territory now. Gains of 20% since the lows in October of last year. Building on that today, gains of 1.6%. Of course, China reopening, a key part of that story, but also on the regulatory front, hints from senior officials in China that the clampdown on technology is coming to an end. Futures in the US then looking to gains of just 0.1% after that very solid session over on Friday. The Bloomberg Dollar Index, and this is helping with this risk on sentiment, currently down 0.3%, so continued softness for US dollar. Brent at $80 a barrel, that's up by almost 2%, 1.9%, again linking to expectations there's going to be greater demand out of China. Francine.
Now, Tom, let's dig a little deeper into the sectors. I'll do it pretty fast because I have not one but two espressos actually waiting on the desk, and it's Monday. Everybody needs one or two espressos to start the day off like this. Now, there's actually quite a lot more red on the screen than I'm seeing on the Bloomberg terminal, because if you look at the 19 groups that make up the industries, all of them are gaining apart from utilities. But then you do have some of the specific companies that are either looking at a bit of profit taking or dragging some of these indices lower. Now, technology gaining 1.4%. I have basic resources, biggest gainers, construction around 1% higher as well. And then, of course, we'll see whether this risk-on mood stays on. And I like the way our managing editor for MLive, Mark Cudmore, was talking about fairies or two fairy tales, which is always a great way to start the week. So let's get over straight to Mark Cudmore. Mark, you're looking at the dollar and Friday's data. Disappointed there's no fairy tale in there.
Well, there might be a bit of a fairy tale in here, Fran. Good morning to you. So this is the Bloomberg Dollar Index price action on Friday. This yellow line is the time we got the non-farm payrolls data. That was the Goldilocks report. There's your first fairy tale for you. It was the idea that, hey, jobs growth was stronger than expected, unemployment down, and even wage inflation coming lower quicker than expected, and the revisions for wage inflation was lower. This was a Goldilocks report. It said the economy can keep on growing strong, and the Fed can get control of inflation. Wonderful. The dollar was a little bit weaker after this. Surprising. So equities were stronger. That made sense. However, then an hour and a half later, we got the ISM report. Now, the ISM report said the exact opposite. It said the economy's careening towards recession. Everything that was about the economy came in worse than expectations and came below the 50 line and was a shocking report. The only number that was really high was prices paid, i.e. it said we're going towards a recession and with inflation. Now that saw the dollar absolutely collapse on this idea that, hey, the Fed's going to have to cut rates because recession's coming very quickly. That drove equities higher. So it's important to know that the move on Friday was not because of the Goldilocks non-farm payrolls report. It was because the big bad wolf, there's my second fairy tale, made up on the spot. It was the big bad wolf of the ISM said a recession is coming and therefore rate cuts are coming. And that is what caused the move on Friday. It's also important to note that we're still trading it as one trade, sell dollar, buy stocks. That was generally the reaction on Friday. By the time we got to Asia, everyone was saying, oh, it's because of this Goldilocks report. No, it was not because of the Goldilocks report. It was because of the big bad wolf that were driving markets on Friday afternoon, and we need to be aware of those two narratives as we go into Monday.
I love that. Mark, you're just so good. Take the rest of the week off. I mean, you managed to talk about not only the markets and beautifully explain what's going on, but inserting two fairy tales. My favorite fairy tales are Bloomberg, MLive, Managing Editor. He can really do it all. Mark Cudmore. Now, joining us now is Christian Kopf. He's head of fixed income and FX at Union Invest. Christian, thank you for joining us. When you look at some of the encouraging news for markets, which is actually bad news in the economy, what does that do to dollar?
Yes, I would like to complement what Marcus just said. The two numbers that we received on Friday were contradictory with respect to economic activity, but they were pointing in the same direction with respect to prices. We've had a big decline in the average wage growth in the payroll report or in the employment report, and I think the prices paid component of the ISM sector is pointing in the same direction. So what we do see here is a deceleration in inflation. And that, I think, is the important factor that is driving the market here and is also driving the dollar. I think we're in for a big divergence in monetary policy between the US and at least Europe in 2023. The Fed will likely end or at least pause its rate hikes on the back of those numbers, while the ECB is set to continue hiking rates, and that should drive the euro higher, in our view.
Yeah, and we want to get more views on that divergence because it's a really interesting call, Christian. But before we get there, give us the rate trajectory then from the Fed. You gave a hint to it. You think they finish in February, is that correct?
Yeah, that's a bit our view. So we're a little bit out of consensus here. We think the Fed is going to do one more rate hike of 25 basis points in February and then end its rate hiking cycle, or at least pause for a very prolonged period of time. Now, the market is pricing in, give or take, 62 basis points of rate hikes in 2023. We think that 25 should do, and that's our view for the Fed in 2023.
Christian, what needs to happen for you to change that view that actually the Fed will end its rate cycle in February?
Well, obviously another pickup in core inflation. We're going to get the number this week. So if core inflation were to continue to rise, as it did last week in Europe, then the Fed would continue with its rate hiking trajectory. But we've had a number of comments here from Bullard last week. Bullard is a very hawkish central bank member, and he pointed out that the rate levels we're reaching here may be sufficient to rein in on inflation. And there are two aspects here which could lead the Fed to pause. The first one is that monetary policy acts with a lag, and we have yet to see the impact on economic activity of the rate hikes that have been undertaken last year. And the second aspect has to do with the rise in real rates. So, if inflation comes down and normal rates stay where they are, we will see a big increase in real interest rates, and that means that we will see a tightening of financial conditions just by the Fed remaining passive and keeping rates on hold.
How would you play that call then, Christian? Because it's a bold call that the Fed stops with 25 basis points in February. Do you then bet on a continued bond rally, or is it within the currency market, soft dollar, that you want to be squaring up for?
Yeah, so we started putting on steepeners last week, and we actually kind of like to receive two-year rates here in the US. I think there is a bit of an asymmetry here. If we were to get a deeper economic contraction, the two-year rate could rally. And we think that the curve is too inverted in the US. We think it will re-steepen. And the second trade always used to be short dollars and long other currencies. So we think that the euro could rally all the way to 111 this year in 2023. And there are a number of emerging market currencies that we like to hold. We like the Israeli shekel, we like the Mexican peso, and we also like Peru. for that matter. So there are some currencies that should benefit from the end of the rate hiking cycle in the US.
So, Christian, is it too late to buy some of these emerging market currencies now? As you say, you have an outlier call on the Fed. When's the right time to then, come in and buy some of the emerging markets that you just called out?
Yeah, Francine, my take is that actually this monetary policy divergence is already reflected in the rates markets. No, so the rates markets are pricing in substantial rate hikes in the euro area, but not so much in the US. So that divergence is already visible in the rates market, but not so much in the currency market yet. So actually, we think that this is a good time to put on the currency trades in select emerging market currencies and also in the euro, also in the Canadian dollar for that matter.
All right, some really important calls there. Christian Kopf, Head of Fixed Income and FX at Union Investment. Going to stay with us. We're going to be talking about more in detail around emerging markets, particularly Brazil, in the minutes ahead. And talking of Brazil, President Lula facing a big test, of course, amid these extraordinary scenes of rioting by pro-Bolsonaro protesters in the capital, Brasilia. That story is next, and we'll get some more calls from Christian Kopf. Stay with us. This is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
News breaks. No one covers the world like Bloomberg.
In addition to him pleading not guilty, as we had expected, to 8 criminal counts here, there was a lot else that happened.
1 million people are getting infected every day, and that's going to rise to 3.7 million by January.
The UK is the only G7 economy that hasn't returned to its pre-pandemic level yet.
Bloomberg, your global business authority.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Welcome back to the Open, everyone. We are 12 minutes into the European trading day, and actually we started the day on a high, but you can see the CAC 40 now trending flat, almost a reversal with the European stocks, so gaining some 0.3%. Now, Brazilian security forces have regained control of Congress and other key government buildings after they were stormed by supporters of former President Jair Bolsonaro. The rioters faced little resistance from police as they ransacked buildings, including the presidential palace. President Lula da Silva, who was away at the time, has vowed to go after those responsible.
There is no precedent for what these people have done, but these people will be punished. We are going to find the financiers, and they will all pay with the force of law for this irresponsible, undemocratic gesture, this gesture of vandals and fascists.
Now, for more on this, let's get straight to Bloomberg's Felipe Pacheco. Felipe, what's been the reaction actually in Brazil to these riots?
Good morning, Francine. Well, we've seen a lot of reaction by authorities throughout Brazil, and particularly by President Luiz Inácio Lula da Silva, and also by his ministers since the events happened in Brasilia yesterday. Lula himself and some of the ministers called the events as barbaric and unprecedented, and they said that those protesters that have already been arrested, over 400 people, will be punished, and not just them, but also the ones that have been financing such protests throughout the country. The top court has also ordered the removal of the governor of the federal district for 90 days, so his responsibility within the events throughout the day can also be investigated. The top court also determined that the campings that have been happening just in front of military headquarters across the country, they have to be dismantled within 24 hours. So I think that as Monday starts in Brazil, as the day, as Brazilians wake up to start the week, it will be important to see how such measures will be actually implemented.
Yeah, remarkable scenes on the ground there in Brasilia, and kind of flashbacks to January the 6th and the insurrection in the US. When it comes to which assets investors should be watching then, after what was a pretty solid year for Brazilian assets last year, there was already concern about the policy direction of the Lula government, and now we have this political instability. What assets should investors be looking at?
Definitely the Brazilian real that starts trading at noontime in London today will probably give the best indication of how these events are affecting sentiment by investors throughout the world as the protests develop. The currency has been underperforming over the past few days. There was a lot of tension regarding how this government will actually implement fiscal policy, how much it will be spending beyond those expectations, and fiscal policy and monetary policy is a big theme for the Brazilian real and also for Brazilian bonds. But apart from that, we should also watch some names that are actually trading in Europe as we speak, such as Casino and Telefônica and also Banco Santander. Those are companies that have huge exposure to Brazil, and they usually reflect the tensions when it comes to big determinant events in the country.
Okay, Felipe Pacheco on the latest out of Brasilia and the implications for investors with exposure to Brazil. Thank you very much indeed. Let's bring back Christian Kopf, Head of Fixed Income and FX at Union Investment. And Christian, before the break, we were talking broadly, of course, about the benefits of soft dollar on the EM space. How are you looking at Brazil, though, as you weigh up the policy concerns for the Lula government with the threat by these right-wing, arguably extremist, pro-Bolsonaro groups and the threat there? How much potential downside is there for Brazilian assets at this point?
Look, I mean, you may have noticed that Brazil was the best performing currency against the US dollar in 2022, in spite of Lula's victory. Yeah, so anybody who thinks that Lula is bad for the economy should just look at the market. Yeah, it has been rallying into Lula's victory. Now, I think that the currency is fairly valued. You have to take a sober look at the country. The currency is fairly valued. The overnight rate stands at 13.75%. That is a very high interest rate, yeah? Good luck anybody who wants to short the real against a carry of 13.75%, yeah? And I actually think that legal turmoil will go away.
Christian, we're also just getting some breaking news out of China. We understand that Chinese officials are considering a record quota for special local government bonds this year. So this seems to be a wider budget deficit, maybe some of the way to support the economy. So by widening the budget target, they're trying to ramp up support, of course, for the Chinese economy. Christian, does it make you more bullish, or, I mean, I don't know whether it's too late to get in on China or how you play that big economy?
Actually, China is the one currency in emerging markets where we're shorting the bond. Well, we're betting on rising rates, no? So we have payer positions in the swap market. We see little scope for Chinese government bond yields to decline in 2023. There will be a reopening. There will be more supply of paper. And we think that actually the 5-year rates in China could rise from here.
And sorry, just to be clear, Christian, your calls on the yuan then, as a result of that, some out there saying it could get to 6.5 versus US dollar. What is the next level you're watching for?
We're quite neutral there, you know. With the reopening, there will be more outbound tourism from China that should put a drain on the current account, and that could lead to weakening of the currency. On the other hand, I think that you're opening to bring back some optimism, maybe some inflows into the Chinese equity market. So we have no position on the Chinese renminbi at present.
Christian, given all of the volatility that we could see in some of the Brazilian assets, does it actually impact some of the neighboring countries?
I don't think it does. I really don't think so. I mean, what you have to look at Brazil is, I think this whole political turmoil will go away. The institutions have been quite stable here. They're not supporting the protesters. It's different from the US, yeah? The one thing you should watch in Brazil is whether the new finance minister Haddad is moving towards populist fiscal policies in response to those riots. And the one thing to watch there is the extension of the tax cuts on gasoline, yeah? So I think Brazil will have to be quite cautious with its fiscal accounts in the coming years in order to prevent a blowing of the fiscal deficit and the public debt levels. And if Haddad were to extend those tax cuts on gasoline as a measure to calm the street protests, that would be bad news for Brazil. But the riots in itself, I don't think are a big deal here, really.
Christian, pretty nuanced then on Brazil and the institutional strength in that country. We'll see how that unfolds in the weeks and months ahead, of course. I want to look back to that divergence call from you in terms of ECB versus Fed. You expect the ECB to be more aggressive in terms of rate hikes versus the Fed in the quarters ahead. And that divergence then, and how that is priced, to what extent that's priced into these markets? Where are you expecting to see that felt across these asset classes? Is it priced in at this point, that divergence?
Yes. So, we think that the divergence will really become visible in February. We think that the ECB will hike rates by 50 basis points in February, and the Fed will only hike by 25 basis points. And then we expect further rate hikes by the ECB going into the summer, because we have relatively high core inflation in the euro area. 5.2% was the print last week, while the Fed will likely end its rate hiking cycle after the hike in February. Now, that is to some extent already priced into the rates markets. We see around 62 basis points of rate hikes priced into the US curve and around 130 basis points priced into the euro area curve. So the best way to play that, in my view, is really through the currency market, where it's not really priced yet. And we think that the euro could appreciate substantially from current levels if that monetary policy divergence were to materialize in the way that we expect it to.
All right, Christian, thank you so much for all of your insights. Christian Kopf, there, head of fixed income and FX at Union Investment. Coming up, Goldman Sachs is planning massive job cuts with positions in its core trading and banking units on the line. So we'll have plenty more on that story next. And this is Bloomberg.
digital-first approach to the future of work is where the industry and all companies will be heading.
Could the future of work not be at home or in the office, but in the metaverse instead?
There's that word, metaverse.
Doing well. How are you doing?
When I think about the metaverse, I think about immersive experiences that have a sense of active presence.
Wow, look at this. This is me. The metaverse is projected to become over $1 trillion market by the end of this decade. And whether you know it or not, you'll probably be working there in the future.
We're moving into a world where we're going to be interacting with computers with our bodies.
This is definitely trippy.
I think the adoption curve is going to be slow.
It's weird.
Like a weird floaty thing right now.
But look at you. You have no legs.
It's kind of a fun world, and we're just at the very beginning of a very long journey.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Bloomberg.com webinars.
Welcome back to the Open, everyone. 23 minutes into the European trading day, and this is a picture across the board. 0.4% overall. Stocks do seem to be extending this global rally that we've seen. And look, this is partly China's reopening trade, but also expectations of slower rate hikes after some pretty dismal data. Now let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Goldman Sachs is embarking on one of its biggest rounds of job cuts ever as it goes deeper than rivals in shedding staff. According to our source, the process will start midweek with up to 3,200 positions affected. More than a third of those will likely be from within its core trading and banking units. UK trade union leaders have been invited to talks today in a bid to avert further strikes on the transport system, in the health service and elsewhere. This week sees a pause in the rail strikes, which brought the network to a standstill in the first few days of the year. It comes after the boss of one of Britain's biggest transport unions called for coordinated strikes involving tens of thousands of public sector workers. Ant Group says it has no plans for an IPO and will focus on its business. The statement came after it indicated that founder Jack Ma is giving up his controlling rights in Ant as the billionaire further retreats from his online and fintech empire. The company is offering 10 individuals, including the founder, management and staff, independent voting rights, effectively removing Ma's control of Ant. Richard Branson's Virgin Orbit says it's on course for Britain's first ever space launch this evening. After completing a vital wet rehearsal, the modified Boeing 747 jetliner named Cosmic Girl is set to climb above the clouds before the rocket blasts away. The mission from Newquay in Cornwall will deploy 9 satellites for a range of customers. That's the Bloomberg Business Flash. Francine.
Laura, thank you very much indeed. Yeah, Newquay, normally better known for stag do's and surfing, now the home of UK space. An interesting story to watch. A couple of individual movers for us to check in with, and some deal making from AstraZeneca, of course, the London-listed drug maker, coming through with a deal for a US-based clinical stage biopharma company called Kincor, priced at $26 a share. This is a $1.3 billion deal. It's expected to close later this month. That is the upfront deal value, $1.3 billion. Astra just down 1% on the back of that news. Engie, we pulled this stock out because it's an example of a European company with big exposure to Brazil, given the political risk there, just zeroing in on these companies. It is a utility firm, of course, and it has and owns Engie Brazil, currently up 0.8%. Vodafone, this is some news around asset sales in Hungary from Vodafone, just down 0.9%. They're getting about 1.7 billion euros for the sale of their Hungary unit. They're going to use that to pay down debt. So it's a check of the couple of individual stories to bring to your attention. Now, coming up, mainland China ends quarantine for arrivals. It's a huge shift, and it makes, of course, cross-border travel a reality again for many people for the first time in about 3 years. Very, very significant indeed. We'll get more details out of what is happening on the ground in China. That is next. This is Bloomberg.
most fascinating entrepreneurs because you also started really young. What did you learn? Did you always think that you'd be an entrepreneur?
Probably, yes. I think, which is a bit sad,
From
isn't it?
age, what, 5,
Well,
6?
maybe, I'm not sure. I come from a family of entrepreneurs, so even though I probably can spell the word and still can't occasionally, it's sort of in my blood. But it's really fun starting a business. And fun growing a business. I feel it's a real privilege. And I started my business officially at 18, but I think I knew I wanted to do it very differently from about 15. But I'm sure it's, if you're surrounded by it, it feels very natural. So yes, it's fun.
And it started how? You started by you went to Florence. It was in Italy, and you started handbags.
Yeah, so I knew I was actually given a handbag by my mother when I was about 16, one of her old handbags, and I remember how it made me feel, and I think fashion is fascinating for the mood-changing, the confidence-boosting aspects, of the sort of tribal aspects of what fashion does. And so I went at 18 to Florence, knowing that was the home of leather goods, which is what interested me. I just wanted to learn, actually, and be surrounded by craftsmen who, making things is important, and that's going to be very interesting, I think, over the next sort of 10 years. I think the onshoring of craft and manufacturing is going to be fascinating, actually. I watched the offshoring. I literally saw it, and I think we're going to be seeing that coming back to local. We have to. When we're all looking at our objectives in terms of carbon, proximity is going to be key.
DOJ or other authorities
could face bigger challenges next.
Was going to keep rate World Cup. This is a 3.
As the economic picture does.
The BOK is getting ready to make a decision. Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Global stocks jump after Wall Street's best day in more than a month amid optimism over China's reopening and slower rate hikes. Will the Fed need to rein in expectations once again? While Brazil's insurrection, security forces regain control after thousands of supporters of former President Bolsonaro ransacked government buildings in the capital, Brasilia. Plus, sources say Goldman Sachs will embark on one of the biggest ever rounds of job cuts this week, with plans to slash about 3,200 jobs. So, Tom, if you look at the markets, actually, we're seeing a nice little rally continue.
Yeah, holding on to those gains. Of course, the passover, the handover from Asia, very strong indeed. The Asian index, the MSCI, Asia Pacific, now in bull market territory, gains of about 20% since the lows of October. So, yes, we had that Goldilocks sprint when it comes to non-farm payrolls on Friday, with wage growth coming in slightly slower, even as unemployment remains just around 3.5%. And then the ISM data for services really plummeting. Bad news is good news when it comes then to investors' expectations of the Fed. We look to February and that decision, with markets now pricing in a rate hike of about 32 basis points or so, but that will no doubt change in the weeks ahead. Across the benchmark there here in Europe, yes, you're holding on to gains of 0.4%. The DAX is up 38 points over in Germany. The FTSE 100 also gaining 22.3%. We'll switch it over and see how things are playing out cross asset, because the last time I checked, oil, WTI, Brent really soaring above 2%. That's playing into the energy space, of course, more broadly across the sectors. There's energy up 0.8%. Basic resources powered by the copper demand and the pricing around copper. Copper is up. Again, you tie that into China. We had a redhead out just in the last few minutes around boosting infrastructure spending in China at a time, of course, when that company, or country, I should say, is reopening. At the bottom of the list, you have real estate just down 0.3%. Again, it's basic resources, oil and energy tying in to that China story that seems to be driving a lot of the action, on top of course, expectations that maybe, just maybe, the Fed can step it down in February. Fran.
Now, UBS executives have shared their forecast on China's GDP growth for 2023 following the nation's reopening boom upon the abrupt exit of COVID-0.
With the exit of zero COVID and together with some of the growth initiatives, I think the power pack of some of the growth initiatives will only come possibly towards the tail end of Q1. And that's because there's massive migration or transmigration of people during the Chinese New Year period holidays, and also low productivity during the 15 days of Chinese New Year festivities, together with more infections, we think. So real growth will come in, tilting towards maybe starting of Q2.
Now, for more on all of this, we're joined by Bloomberg's Sofia Orta-Costa. Sofia, good morning, good afternoon. The border reopening, is this really a watershed moment for China?
It really is, Francine. It's not just the international border reopening. Of course, here in Hong Kong, a lot of people are going home to see their families for the first time in 3 years. But also, very importantly, at this very crucial period in domestic travel, it's the internal domestic reopening. So freer travel between provinces, between cities. This is really key, Francine. Estimates of around 2.1 billion trips expected to be made during this 40-day period. It's incredibly important. It's also the first time that residents in China can really celebrate it. And the expectation here, of course, is that not only travel, but also consumption will pick up. And that also feeds into the China story. We're seeing daily more economists revising upwards their GDP forecasts for the year, because obviously this is a lot faster than many had expected.
Yeah, 2.1 billion trips. It's remarkable. And again, as that aligns with consumer spending, as you say, could be hugely significant. And pretty emotional scenes at airports across China as Chinese nationals flew back into that country. When it comes to technology, though, Sophia, and you've been watching this, of course, I know, what is the sign? How convinced can we be that the crackdown on tech is finally over?
So what changed, Tom? The key thing was an interview that Gu Shuqing, who's a very senior official at the PBOC, he gave an interview saying that he thinks the tech crackdown essentially is over. Now, these are very strong words from a very kind of authoritative figure in China, and that really sent the sector rallying today. You see also Alibaba, of course, the Ant-IPO, even though it's not happening, the fact that Ant was actually allowed to raise funding, that's a story from last week, again carried over to the positive sentiment today. But really, Tom, it's about the COVID-0 pivot, the tech crackdown pivot, the property deleveraging story pivot. Is pivoting really, really strong pivots out of China. It's really driving markets, not just here in Asia, in Hong Kong, but also carrying over to the Europe session today.
Multiple pivots. And for anyone who wants to get caught up on this, I do recommend Sophia Horto-Acosta's weekly tweet thread on a Friday afternoon, where she sums up what's been going on in China, because it's a lot. Thank you, Sophia Horto-Acosta, for the latest. Let's get to the banking sector now. Some more news when it comes to job cuts. Bloomberg learning that Goldman Sachs is embarking on one of its biggest rounds of job cuts, planning to cut about 3,200 positions. That's just this week. More than a third of those will likely be from within its core trading and banking units. For more, we're joined by Bloomberg's finance reporter, Tom Metcalf. Tom, which areas of the bank are most likely affected by this then?
Well, as those stats show, it's got to be pretty sweeping, right? This is about 6 to 7% of their total workforce. And I think the fact you said about a third are going to be in banking and trading, those are the core divisions, right? So it shows this is not just back office, this is across the board. And I think it really explains that, you know, Goldman are really looking to cut their costs, and then they're not hanging around. This is a bit more extreme than we've seen at other banks.
Yes, have we ever seen something of this scale at Goldman, and how symptomatic is it of problems within the bank?
Well, you have to go back to 2008 to see something of this scale, where it was something like 10% of the workforce. So that gives you a sense of, you know, where they are, I suppose. Look, I think it's the same situation at every bank. You know, they had 2021 was a great year, and Goldman, like a lot of banks, really in many ways overhired. So it's 34% bigger than it was, you know, I think 2 years ago. So, you know, that puts that sort of 3,200 in context. And if you want to be a bit more glass half full, they were expecting to cut about 4,000 jobs, you know, in previous reports. So it's come back a little bit from that, but still very bad news.
Yeah, as you say, the employment numbers under David Solomon in terms of that growth of headcount has been quite significant, hasn't it? This sets us up now. We're talking about the job cuts, but of course banks are preparing for maybe another difficult year. We have earnings out later this week. What are you and the team going to be looking at in particular?
Yeah, you've got Jefferies coming out today, and then I think Friday's a huge day. There's Citi, Bank of America, you know, a few other big hitters. So, look, the things I'll be looking closely at is how the traders done. So far, they seem to be sort of inured from all the sort of macro volatility, you know, benefiting really from sort of interest rates rising. And then, of course, the investment banking divisions, we're expecting that to be very, very bad news. We had a story last week saying that, you know, if you're an investment banker, it's down something like 40% in some cases. So very bad news.
Tom, thank you so much. Tom Metcalf, they're joining us, of course, on this Goldman story. Coming up, getting the green light, Republican leader Kevin McCarthy finally becomes House Speaker. But what does a long and chaotic process mean for the party going forward? We'll have that next, and this is Bloomberg.
There's an epic saying in Italy when it comes to family generations that the first generation creates, the second generation expands, and the third generation destroys. And that's almost what happened in the Gucci story.
So hate and love together.
Now I would have a much more experience about those who says I love you and then betray you.
The Gucci family was the strength, but also the weakness of the label.
The situation became dire with Gucci's finances. They were not able to pay salaries. They were not able to pay suppliers. Gucci's really teetering on the brink at this stage.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
Welcome back to the Open. Happy Monday. We are about 40 minutes into the trading session, and you're seeing across the European space still gains of 0.4% after data out of the US suggests that maybe the Fed can move a little lower in terms of the rate hikes come February. ISM services coming with a major drop, and then, of course, the Goldilocks scenario in terms of non-farm payrolls on Friday. China is a major story once again with the reopening, and that is playing out certainly when it comes to the energy space. And you're seeing Brent and WTI up very strongly indeed, up almost 3% on Brent, back above $80 a barrel, $75 a barrel. Don't forget there was about an 8% loss last week on WTI. WTI now back above $75 a barrel. That's a gain of 2.9%. Again, tying to the China story, we were hearing from the party secretary of the PBOC that economy will be back to normal. That's his forecast once that support comes through. So we continue to watch the energy space. Francie.
Now, over in the U.S., the House finally has a speaker. Republican leader Kevin McCarthy was given the green light after 15 rounds of voting. Now, he takes the post significantly weakened by 4 days of infighting and bargaining within a sharply divided party. Now, the protracted deadlock between establishment Republicans and hardline conservatives previews more chaos ahead. Well, joining us now is Elliot Hentoff, head of macro policy research at State Street Global Advisors. Elliot, thank you so much for coming on. When you look at some of the concern out there, first of all, what kind of Republican Party are we looking at? And if you look at the 20 GOP lawmakers that kept on blocking him, does it give us an idea of how they're going to vote elsewhere?
I think one way to think about it is these 20 are trying to form a coalition government the way we know it in Europe. But imagine a coalition government in Europe with an absolutely extremist party having a veto on coalition plans. That's basically what we're going to get going forward from the U.S. House of Representatives. And this is not a market story this week. We've kind of moved on, but it'll come back in a few months in a big way.
And why will it'll come back because of the debt ceiling, right? And what makes it different this time? We've got there, we've been to the brink before, markets can kind of shrug it off because eventually they get it over the line. We had that downgrade, of course, when Obama was president from S&P. Are we facing up to kind of similar scenario, or is it different this time?
Well, I was at S&P's sovereign team when the downgrade happened 10 years ago, so I can speak from direct experience.
Were you responsible for the downgrade?
I was not responsible, but the thought behind it was simply that, you know, there's an ability and willingness to pay your debt, and at AAA you have to show highest level of willingness and commitment. Clearly that's no longer the case when one party or elements of one party are advocating or tolerating a default scenario. This time around, it's going to go beyond the brink. Now, that doesn't mean there'll be a default, but what it means is there will be no agreement. Clearly, these 20 are not in a mood or culture for compromise, and therefore there'll have to be alternative means to prolong debt payments. So you'll have a crisis later on this year well beyond what we've seen in the past. In the past, we've seen 1-month treasuries move up 20, 30 basis points ahead of a debt ceiling deadline. I think this time it could even be a bit bumpier than that.
But I mean, basically, his, the dependence of the speaker will be on this group of 20. And I know yesterday he promised something like, counter woke indoctrination, strengthening border security. Is that not enough to then get the debt ceiling through?
No, I mean you don't need to be a great political analyst to see that it took 15 votes just to basically end up at the final result where you wanted. The problem is the politics don't align. Why would the Democratic White House negotiate with these 20? There's no incentive. The incentive is politically, somebody else should take the blame, and everybody has incentives to basically bury deep and hold still and avoid a compromise. And therefore, it will go further than it has gone in previous episodes.
So then markets and investors have to start to wargame the worst outcomes then. What are the potential tools at the Biden administration's hands that they can reach for if, as you forecast, we get to a serious crisis on this issue?
Yeah, wargaming an actual default is quite a frightening scenario. But what I presume is the White House is looking at all sorts of quasi-legal and alternative legal pathways to maintain debt payments. And they exist. Now, some of them were fringe and kind of kooky ideas, but they are, there's a legal grounding for advocating for them. So I think those will come to the fore, and one of them will probably be pursued until eventually the politics move in a different direction.
So what does this mean for 2024, and when do markets latch on to the prospect of that?
It means first for 2023, we've just had the story about kind of the dollar softening on the idea that the Fed we're kind of hitting peak Fed. So you'll have kind of peak Fed coincide with the arrival of the debt ceiling crisis. Both of that bodes poorly for the dollar on the back of growth ex-US picking up strongly. 2024, when you're talking about the election, again, both sides think this is a winner. Now, as we know from this year's midterms, ultimately the American public does not like chaos, and so whichever party looks to be the bit more responsible party will benefit from this.
I know you look at geopolitics as well, so we'll zero out for the intricacies of US politics to global geopolitics. You've got Ukraine, you've got China, US. There's been some mood music, it seems, at least on the fringes, from Chinese officials on a softening stance vis-a-vis Washington. Is that likely to hold? What are you looking at in terms of the geopolitical headwinds or potential catalysts this year?
Well, this should be a much better year than last year. Last year we had global macro basically punched a couple of times from geopolitics. It should quiet down this year, but obviously that's a cyclical period of better mood music, as you put it. That's likely to turn a little bit darker in the coming years thereafter. Again, temporarily, the incentives for China: normalize the economy, restore basically balance to the economy, public finances, the property sector. All that has to happen before you engage a little bit more combatively again.
Elliot, when you look at the war in Ukraine, what's the probability of a regime change in Russia?
I think it's impossible to know the probability. What we know is, if you think of Russia as a black box or the Kremlin as a black box, it's gotten hit quite a bit. There must be turbulence. Something must be moving within that black box. Historically, losing wars is not good for dictators. There's very few dictators that remain in place with everything intact when a war goes sour. The outcome of the war is not finished yet. I think that's still a market theme as we come into the spring, and both sides try to really move positions on the battlefield. But by the summer, the final verdict should be in.
Okay, and I know your central thesis is it's going to be a long grinding conflict still, with Russian troops, of course, continuing their occupation of large parts of Ukraine. Elliot, thank you very much indeed. Elliot Hentov, head of macro policy research at State Street Global Advisors, very clear on the risks around the debt ceiling now, and for investors to wake up to that potential crisis later this year. Let's get the Bloomberg First Word News now with Laura Wright. Laura.
Thanks, Tom. Thousands of supporters of ex-President Jair Bolsonaro have stormed Brazil's Congress, Supreme Court and presidential palace a week after President Lula da Silva took office. Protesters ransacked Congress before security forces were able to regain control of the capital. Bolsonaro says the storming of government buildings by his supporters is, quote, not within the rules of democracy. President Lula da Silva called the incident unprecedented in Brazil. China's border reopening after 3 years of global isolation is sparking a homecoming rush for many Chinese citizens living overseas. Beijing has dropped quarantine for overseas arrivals, though visitors will still need a 48-hour negative PCR test. A resurgence in outbound travel may take longer, though, as many countries adopt stricter COVID testing requirements for visitors from China. UK trade union leaders have been invited to talks today in a bid to avert further strikes on the transport system in the health service and elsewhere. This week sees a pause in rail strikes, which brought the network to a standstill in the first few days of the year. It comes after the boss of one of Britain's biggest transport unions called for coordinated strikes involving tens of thousands of public sector workers. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Tom Francine.
Laura, thanks so much. Laura Wright in London. Coming up, what are the 50 companies to watch this year? Well, Bloomberg Intelligence has compiled a list from tech to semiconductors and retail companies. We'll bring you the details next, and this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Welcome back to the Open, everyone. 52 minutes into European trading day. The picture is one of stocks actually extending this global rally in risk assets, driven partly by China's reopening trade and expectations of slower rate hikes. I had not only a second espresso, but it was a cold espresso. Bad idea on a Monday morning.
Okay, hold on to your hats. Francine is powered up. Talking being powered up, commodities, by the way, just touching on this again. WTI up almost 3% at $75 a barrel. So really rip-roaring in terms of what's happening across the oil space. Let's take a look at some of the key things markets are watching out for this week. This morning, we're getting plenty of European data. We've already had German industrial production numbers for November. We'll also do US consumer credit figures. Tuesday, a big day for the aviation industry. Both Boeing and Airbus will report their respective 2022 deliveries. And there is much more data from Europe, with various countries giving an inflation update, crucial, of course, for the ECB. On Wednesday, the latest US mortgage application figures are scheduled to come out. And Italian retail sales data is also set to be released. And, of course, on Thursday, it is US inflation. That really is the data of the week. Plus, Was it a Christmas bonanza for UK retailers? We're going to get trading updates from Tesco, Marks & Spencer's and ASOS. And on Friday, it's all about Wall Street. A host of banks, as Tom Metcalf was saying, reporting earnings, including Bank of America, JP Morgan, Citigroup and Wells Fargo.
Now, Bloomberg Intelligence has compiled the list of top 50 companies to watch as we get nearer to earnings season. So to give us all of the details, Bloomberg Intelligence's Director of Research, Tim Craighead, always a treat to have Tim on. So Tim, first of all, how exactly did you guys select these 50 companies?
Yeah. So this list is a subset of our focus ideas, which is a broader group of stocks, companies, where we have strong fundamental views. We think they're a little different than what the market thinks. Importantly, there's catalyst ahead to trigger a change in perspective. And these 50 are very focused on 2023 developments and catalysts.
And you also talk and focus in on management changes. And one big management change that really grabbed our attention last year was Disney and Bob Iger. What others are you looking at? Why is that so significant?
Yeah, absolutely. So crazy economy. We all know that we're in the midst of turbulence. Having a catalyst like management change is certainly, key. And there are 3 of these that are on the list where we think this will spur developments in 2023. You mentioned Disney, it's there. Prudential is another here in the UK. They went through a massive restructuring and solely focused their business in Asia. The reopening of China could be quite interesting as you start to see wealthy Chinese come into Hong Kong, which is where they sell their policies, etc. They have a new CEO that comes in to spur this forward in February. And lastly, Adidas. New CEO coming in actually now from Puma, where he did great things. We have pretty high hopes for that company this year.
So Tim, another important theme, of course, is the shift to EVs. Does that continue?
Absolutely. We think it accelerates. And again, not overdoing the China thing, but with various Chinese stimulus coming through, we think that continues to accelerate. Porsche, broadly speaking, is very rapidly moving towards EVs. Upwards of 45% of sales by 2025 will be in the electric vehicle area. It's amazing if you think about it. CATL, world's largest electric vehicle battery company, Chinese company. Costs are declining if you look at lithium, which had inflated, and their sales are accelerating. And so you've got ideas like that. There's a negative one on there, Allison Transmission in the US. They're a leader in transmissions for medium and heavy duty trucks. As things shift from that core traditional business, we see competitive threats here.
It's a fantastic. It's so well produced. Again, really is a must read. You talk about Porsche. Porsche Taycan have done really well, haven't they, on the back of this? But check this out. It's on the terminal. It's online. What a great resource put together by Tim Craighead from Bloomberg Intelligence and the team. Tim, thank you very much indeed. Coming up later, Rolls-Royce CEO, talking of cars, Torsten Müller-Oltvos joins us to discuss the company's annual results. The interview is live at 3:30 p.m. UK time, 10:30 a.m. In New York. Stay with us. There's plenty more coming up. This is Bloomberg.
more activity in the fusion world than ever, and not just in government research labs. There's also an emerging private fusion industry that's attracted billions of dollars in capital in recent years.
Governments and private investors alike realise that we've got to find a solution that's going to allow us to get to net zero targets.
This is one of the hardest but most rewarding problems that humanity could work on. Ultimately, we all want the same thing. We want someone to put electricity on the grid from a fusion power station as quickly as possible.
Frankly, the scale of the challenge, 3,000 gigawatts of fossil fuel to replace, there's not many things that can do that. In fact, there may only be fusion that can really do that.
And while many in the scientific community predict fusion power will take decades, some in the private fusion space believe we'll get there in just a few years, as soon as the 2030s.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Count Under the Close. Welcome to Bloomberg Crypto.
This is Bloomberg Surveillance, early edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Global stocks rally on optimism over China's reopening and slower rate hikes. Will the Fed need to rein in expectations once again? Brazil insurrection. Security forces regain control after thousands of supporters of former President Bolsonaro ransack government buildings in the capital, Brasilia. Plus, sources say Goldman Sachs will embark on one of its biggest ever rounds of job cuts this week, with plans to slash about 3,200 jobs. Now, first thing is first, let's check in on the markets and then go into some of these main top stories. The stock's definitely extending some of the global rally. So if we get the board up for you, I'll be able to talk about what the markets are doing right now. Now, we're seeing a lot of, well, rally really in risk assets driven by China's reopening, trade, and expectations of slower rate hikes. We had some pretty discouraging news in terms of data on Friday. That means there's a bit of change in expectations on what the Fed will do. European stocks gaining some 0.4%. Look at elsewhere. I think that the French CAC is pretty much flat. The US 10-year 359, and then we're also seeing quite a movement on crude oil, 80.73. This is for Brent. Now, if we dig deeper into the individual not industries, but the individual countries that are actually doing the most or changing the most, I do think, apart from the CAC and, of course, the IBEX over in Spain, that's pretty much flat. We're seeing modest gains. Now, global stocks rallying, driven by China's reopening, and, of course, this expectation of slower rate hikes. It comes after Wall Street ended the day up more than 2% on Friday, following a weak ISM services reading and slowing wage growth. The focus now shifts to this week's U.S. inflation data. Joining us now is John Bilton, JP Morgan Chase Bank, head of global multi-asset strategy, and Christina Kino, managing editor for markets. So thank you both for joining us. John, let's start off with you. When you look at the Fed, when you look at repricing, so bad news on data means good news for what the markets are expecting the Fed to do. Are they wrong?
I would say they're getting a little bit carried away with themselves because, let's face it, the Fed have done a lot of work over the last 12 months to really start to rein in inflation expectations, really get pricing under control, etc. And yes, we could be getting close to a pause, but there's not enough support for a pivot. And at the moment, you've got, particularly interest rate futures markets suggesting that the Fed are suddenly going to do a screeching J-turn and go and start cutting rates again. And we just don't have the setup for that today.
I mean, this means pushback time, once again, from Fed and FED officials.
Absolutely, Francine. It's very interesting, though, the message that we've gotten from the Fed. I think it's absolutely right what John said. I think we're too far from really taking a look at those Fed rate cuts that are already being priced into markets for the second half of 2023. And the message from the Fed is that markets shouldn't underestimate the ability to keep rates higher for longer. I think that really is the message that markets need to remember. Yes, there is likely going to be a slowdown in that relentless pace of Fed tightening that we saw in the second half of last year. But a pause is very, very different from rate cuts. And so long as markets remember that there is a key difference between those two things, then all could be smooth sailing. But as we know, markets like to exaggerate things, right?
I mean, this is about remembering, or this is about the markets realizing? Because we've heard many times of frustration from a lot of Fed officials in saying that just markets are too hopeful about the path ahead.
Absolutely, Francine. I mean, I think this is really the nature of markets. They like to kind of overprice a particular scenario and then have to reel that back in once we get that input from data and from Fed officials. And so this week is really going to be key because, again, we're going to get that U.S. inflation number following the all-important payrolls number from Friday. And, you know, I think it really is what markets are really hoping for is kind of this soft landing, Goldilocks sort of scenario where, yes, employment is maybe pulling back a little bit, but not rapidly so. But inflation is also pulling back from those really high levels that we saw last summer.
So, John, where are you expecting the biggest opportunity? I know we're expecting quite a lot of volatility, and certainly you are. Is it the fixed income space? That's the one where you're going to see the most interesting bits.
Yeah, I mean, certainly for now. I mean, look, make no mistake, this is not 2022. Asset prices are lower, yields are higher, so there's more opportunity out there. Look across credit, investment grade. Look at the all-in yields. You can clip nearly 6% coupon at the front end. Get to European high yield, you're getting towards 8. Get towards emerging market debt, you're getting towards 10. These are equity-like returns from fixed income assets. And look at what the Fed are trying to do. They're trying to calm the market down. Not too much one way, not too much the other. That supports a carry trade. And so we think early doors, it's probably the fixed income space that's where you want to be looking for opportunities.
So you're still underweight equities?
We are at the moment underweight equities.
Across the board?
No, we're beginning to look at areas where we can lean into. I mean, Asian stocks at the moment, China's reopening. That's a really important feature. Also bear in mind some of the support given to the real estate market and the fact that we're seeing a little bit more outlook for a more sort of growth-oriented policy going forward. That's supportive for Asia in general. Europe also, it's been a warm winter. It may have, caused problems for the ski season for certain people, but it's certainly caused a lot of support for the energy outlook. So there's less issue in terms of the gas crunch that some were expecting. That means it's not as bad as feared in Europe. Europe actually looks as if it may be in a little bit better shape than some had feared. So there are plenty of opportunities in equity markets, but bear in mind, we've yet to see the true impact of this economic slowdown around the globe on corporate earnings. And that's something, that shoe is still yet to drop.
Yeah, and we're spending quite a lot of time, Christine, also looking at some of the financial stocks, and of course Goldman Sachs with the Bloomberg scoop saying, look, they're going to probably fire around 6 to 7% of their workforce. We haven't seen that for a while. So is that really symptomatic of what the economy will live through?
It certainly seems like a lot of these industries are preparing for that worst case economic recession scenario. I mean, I think absolutely right what John was saying is that we really haven't seen the full impact of an economic slowdown or a recession scenario just yet in the real economy. And that's probably something that investors will have to remember, especially going into the second half, is that, we're probably going to have to brace for a slew of more job cuts, potentially some bankruptcies and defaults and things like that on the corporate sector. And that could be something that tempers this early optimism that we're seeing this year.
Is there anything else in terms of sectors that we should be watching out for as, I guess, an indicator as we get into earnings season? Is basically job loss or cost cuts as an indicator of, symptoms going wrong?
Absolutely, Francine. And definitely something that investors will be mindful of, particularly, I think, if there are any signs of these job cuts spreading beyond the tech sector, which we know has been very problematic. And banks, of course, make sense as well, because we've seen a lot of kind of buildup in employment over the last couple of years. Goldman says, of course, that's one of the reasons why they're having to cut some of these positions now. But if we're seeing signs of that spreading across kind of more generally into other sectors, then that really tells you that there is this massive widespread preparation among companies bracing themselves for a slowdown in the second half, and something that could potentially spread across different industries beyond these two, finance and tech.
John, when you look at some of the divergence, if you look at divergence in central banks, I mean, is this the big story of 2023?
Well, I don't think it's the big story of 2023. I think the cooling of inflation and the trajectory of the economy in general will be the big story. But make no mistake, it's really important for where you're picking where you want to put money to work. Yeah. Because if we are right that the Fed are going to be among the earlier of the central banks to pause on rate hikes, then this weakness that we saw at the back end of 2022 in the US dollar could continue, could extend a bit further. Under those circumstances, some of the very much underperforming markets, particularly emerging markets, begin to get a little bit more support. We prefer to think about emerging markets as a full asset market, including the debt side as well. But certainly what it does is it removes one of the constraints to those emerging assets being able to perform.
All right, thank you both for joining us. Christina Aquino, Managing Editor for Markets, and John Bilton, JP Morgan Chase Bank Head of Global Multi-Asset Strategy, stays with us. Now coming up, Goldman Sachs, as we were just saying, said to be planning big job cuts with positions in its core trading and banking units on the line. So we'll have plenty more on that story a little bit later in the program. This is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lackway here in London. Now, we're back with John Bilton, JP Morgan Asset Management, Head of Multi-Asset Strategy. He's still with us. We're talking a little bit about some of the pitfalls and actually what you're seeing in 2023. So first of all, the China reopening. I know it's not going to be plain sailing ahead, but do you play China right now, or are you still a bit cautious?
Well, I think that you've got to look at the longer-term outlook for this. I mean, China has been an economy which has been under lockdown for 2 years, nearly 3. It's been one which has been at the heart of some of the concerns we had around the global supply chain. Of course, there's massive pent-up demand there, and we do think that as the reopening takes place, then you will see a pretty significant economic boost. Chinese growth came in last year with a 3 handle. It's probably going to be back more towards the targeted level of the sort of middle 5s this year. That's a big deal for a global economy that's really looking for one of the engines at least to be running. So we do think that this is an important structural change here. In terms of how we play it, one has to take a little bit of caution, because with Chinese New Year coming up, the beginning of the mixing, we saw what happened in economies over here when we reopened. It's not going to be any different. So there will be bumps along the way. But this is an economy where, let's face it, it's likely to become, over the next few years, the biggest economy on the planet, yet it's been underperforming for a couple of years. This is a structural story, we believe.
John, when it comes to fixed income, how do you play Europe? So there's a divergence, and we're actually seeing spreads widening a little bit between, for example, German bunds and Italian BTPs. Are we going to see some of the political upheaval going back at the forefront this year?
I mean, look, you can never be too far away from political debate within Europe, but I think that we've got so many more levers that can be pulled. There's the redeployment of the next-gen package towards supporting consumers in more stressed countries. You know, the ECB are pursuing an inflation targeting level. We've probably got a little bit more in terms of rate hikes. Certainly last year, Christine Lagarde indicated that they would keep going as long as they needed to. You know, the euro is getting more supported, and generally, the economy across Europe is in reasonable shape. The big issues that were facing the European economy, squeezes on consumers, particularly through energy and food prices, they've been dealt with in large part. So, you know, we do feel that if we're getting China and Asia reopening, then Europe will be a beneficiary as well. So there's reasons for some cautious optimism. You know, there will be pockets probably across Europe where we will see some contraction, but the severity of it...
Countrywide, or does it impact...
We think, you know, certain sectors, certain countries may suffer more than others, but the reality is the risk of a sharp supply-side influenced recession that we saw in Europe, that seems to be abating somewhat. So the outlook looks a little bit better. But again, you know, we've got volatility ahead. We've got some reason that we need to be a little bit cautious in terms of the deployment of risk. Look for opportunities where we can lean in. That means fixed income. That means credit. That means looking for where does the central bank want to, what does it want to achieve? It wants a calmer market, rates at a sensible level. That means clip and carry.
I want to talk about UK, and then if we have time, also Japan. I mean, the UK, if you look at Governor Bailey, it's not an easy task. It's probably one of the hardest in the G7.
It truly is. I mean, look, the UK has a more acute supply-side issue than many of the other nations around the globe. And it's highly likely that we will see further pressure on sterling over the course of the year. The UK has to continue to work through its negotiations with its biggest trading partner, and the outlook for the UK economy is one where we do see some squeeze on the consumer here. So it's not a pretty picture. And of course, if rates go up to tackle inflation, as we saw last October, that really hurts the mortgage market and then the consumer. It's an incredibly difficult balancing act. And the UK generally, we think, will probably see that economic weakness mostly come through in the currency.
So what do you do? I mean, there's also, though, a bit of concern that, you know, foreign investors are not back in the gilt market. How does this play out?
Well, I think, you know, we've got a weaker economy in the UK. It's likely that we will continue to see some significant demand for gilts from domestic pension funds, from domestic asset allocators, because, you know, against a weakening economy, those gilts are now offering a reasonable return. So we do think that there'll be support there. It makes it more difficult for it to rally as hard as some other markets, perhaps, but certainly we don't see any shortage of demand in the gilt space.
Japan, I mean, that was, you know, that gave us a nice Christmas present if you're working on the markets. Are you expecting, again, are the markets getting ahead of themselves?
I don't think so. Look, remember we've got, you know, Governor Kuroda will be stepping down at the end of March, so certainly this was a little bit of a surprise that this move on the yield curve control happened when it did. But if you bear in mind where Japan's been targeting, it's been trying to get back up towards that 2% inflation target. They've achieved it, with a little bit of help from the wider global economy, of course. But under those circumstances, like every other central bank, you know, they need to move away from that ultra-easy policy. Not as far as others, of course. But, you know, we think that this is the first step towards possibly some modest normalization in policy.
John, thank you so much, as always, for joining us. John Bilton there, JP Morgan Asset Management, Head of Multi-Asset Strategy. Now, coming up, UK Prime Minister Rishi Sunak set for talks with union leaders to resolve growing industrial unrest. We'll have plenty more on that story next, and this is Bloomberg.
digital-first approach to the future of work is where the industry and all companies will be heading.
Could the future of work not be at home or in the office, but in the metaverse instead?
There's that word, metaverse.
Doing well. How are you doing?
When I think about the metaverse, I think about immersive experiences that have a sense of active presence.
Wow, look at this. This is me. The metaverse is projected to become over $1 trillion market by the end of this decade. And whether you know it or not, you'll probably be working there in the future.
We're moving into a world where we're going to be interacting with computers with our bodies.
This is definitely trippy.
I think the adoption curve is going to be slow.
It's weird.
Like a weird floaty thing right now.
Oh, look at you. You have no legs.
It's kind of a fun world, and we're just at the very beginning of a very long journey.
Was going to keep rating World Cup. This is a 3.
As the economic picture does.
The BOK is getting ready to make this decision. The UK Prime Minister Rishi Sunak is set for talks with union leaders today. That's as a threat of more widespread action hangs over the country. Well, joining us now is Bloomberg's Lizzie Burden in London with a roundup of some of the UK news. So, Lizzie, good morning. What exactly is the outcome that's expected from Sunak's meeting with the unions?
Well, he's meeting the rail union bosses in less than 10 minutes this morning. I should say it's significant that he's even meeting them, because on Friday, Rishi Sunak said that he wanted to get round the table with union bosses for grown-up discussions. But you remember last week, the government said it wanted to introduce this tough anti-strike legislation, and in response, the unions said that they could introduce coordinated strikes involving tens of thousands of workers, so even more chaos than we've already seen. But he was speaking to the BBC over the weekend, and he even hinted at the possibility that he could negotiate on pay this year, not just next year, as we had heard so far. Take a listen to what he had to say.
We want to have a reasonable, honest, two-way conversation about pay and everything else. We're about to start a new pay settlement round for this year.
And we also heard over the weekend from The Guardian that the government's considering actually paying a one-off bonus to workers to help them deal with the cost of living crisis. That's something that Rishi Sunak's spokesman previously had ruled out. So you can see this hard line is starting to soften.
Yeah, it was also a really great comprehensive interview that he gave yesterday, and so many questions. I mean, I got so many texts saying, oh, he didn't confirm or deny whether he had a private GP. Where does all of this leave him politically?
Yeah, and such a hot question in the UK at the moment, whether people who can afford it should be paying for their health care. But where it leaves him politically is he needs to at least be able to say that he's brought the unions down from their original demands. Remember, the nurses wanted 19% raises. But more than that, he needs to stop the chaos from the strikes, because it's dominating the news agenda, apart from Prince Harry's memoir, and it's really frustrating his own MPs. He has said, remember, that he wants to halve inflation this year, and he also said in that interview that isn't a given, hence why he needs to negotiate very strongly with the unions now, and he's really staked his reputation on these 5 priorities, also including cutting NHS waiting lists, which really is a risky political strategy. He's told the public, judge me on what I deliver, and we know we've got to have a general election by January 2025.
And we'll also find out on how the government plans to, I guess, support businesses on their energy bills today.
Yes, and it could be today or later this week, we're not sure yet. But Jeremy Hunt has said that the current support isn't sustainable. It's too expensive. It's only expected to continue being worth about £5 billion. Now, this has caused massive consternation across industries. The manufacturers say that businesses could have to cut jobs. Hospitality says that some businesses could fold. And the Federation of Small Businesses says that small firms are particularly vulnerable to all of this.
Lizzie, thanks so much. Our Lizzie Burden there with the very latest here from the UK. Now, we'll also be covering all things UK every week on Thursdays at 9:30 a.m. UK time in our half-an-hour special. Now, let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. China's border reopening after 3 years of global isolation is sparking a homecoming rush for many Chinese citizens living overseas. Beijing has dropped quarantine for overseas arrivals, though visitors will still need a 48-hour negative PCR test. A resurgence in outbound travel may actually take longer as many countries do adopt stricter COVID testing requirements for visitors from China. Now, Kevin McCarthy, who became U.S. House Speaker on Saturday after 15 votes, is rallying Republicans with pledges to champion spending cuts and also strengthen the borders. On Monday, the House votes on new rules, including a measure to allow a single member to force a motion to vacate the speakership. President Zelensky says Ukraine is sending reinforcements to defend two frontline towns in the Donetsk region that he called among the bloodiest in the fight against Russia's invasion. On Sunday, Kyiv rejected as nonsense a Russian claim that 600 Ukrainian soldiers were killed in a major strike overnight. The rocket attack was said to be retaliation for a New Year's Day attack by Ukraine that killed nearly 90 Russian troops. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now we look at exactly what's going on in the markets. Partly, of course, is not only the rally in risk assets that we're seeing, but of course the dollar extending the drop from Friday. Again, traders now betting that the Federal Reserve will slow rate hikes with, for example, the Institute for Supply Management's Index of Services in contraction territory. That was the big story on Friday. Stocks overall extending this global rally in risk assets. Now, coming up, President Lula faces a big test amid extraordinary scenes of riots by pro-Bolsonaro protesters in Brasilia. That story is next, and this is Bloomberg.
There is an epic saying in Italy when it comes to family generations that the first generation creates, the second generation expands, and the third generation destroys. And that's almost what happened in the Gucci story.
So hate and love together.
Now I would have a much more experience about those who says I love you and then betray you.
The Gucci family was the strength, but also the weakness of the label.
The situation became dire with Gucci's finances. They were not able to pay salaries. They were not able to pay suppliers. Gucci Gucci's really teetering on the brink at this stage.
Moment news breaks. No one covers the world like Bloomberg.
In addition to him pleading not guilty, as we had expected, to 8 criminal counts here, there's a lot else that happened.
But 1 million people are getting infected every day, and that's going to rise to 3.7 million by January.
The UK is the only G7 economy that hasn't returned to its pre-pandemic level yet.
Bloomberg, your global business authority.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
Global stocks rally on optimism over China's reopening and slower rate hikes. Will the Fed need to rein in expectations once again? Brazil insurrection security forces regain control after thousands of supporters of former President Bolsonaro ransack government buildings in the capital, Brasilia. Plus, sources say Goldman Sachs will embark on one of the biggest ever rounds of job cuts this week, with plans to slash about 3,200 jobs. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Brazilian security forces have regained control of Congress and other key government buildings after they were stormed by supporters of former President Jair Bolsonaro. Well, President Lula da Silva, who was away at the time, has vowed to punish those responsible.
There is no precedent for what these people have done, but these people will be punished. We are going to find the financiers, and they will all pay with the force of law for this irresponsible, undemocratic gesture, this gesture of vandals and fascists.
Now, for more on all of this, let's talk to Bloomberg's Rodrigo Orihuela. Rodrigo, thank you for joining us. So what do we know so far about what exactly happened yesterday?
Well, it seems from what the different government members and the justices have said is that there was quite a bit of police inaction that allowed as many as hundreds of buses with supporters to get into Brasilia, get very close to some of the key government buildings, including the presidential palace, the Supreme Court building, and the Parliament. And the supporters were able to break into this while the police took a very long while to act. And this has led Lula to declare what they call an intervention of the state of Brasilia, which basically means that they take certain powers away from the local government, mainly security, and hand it over to somebody who's named by the government to control it while they find a solution for this, and that will take about 90 days. And a lot of people have come out from Lula's camp and from others to denounce this and say that this was terrorism, which is the word that's being used in Brazil. And Bolsonaro himself, who is in the US, has been a bit more relaxed in his comments. He has compared them to other protests that existed under the previous leftist governments about a decade ago.
Yeah. So, Rodrigo, what actually happens next?
So one thing that happened last night, the Supreme Court, one of the justices in the Supreme Court ordered that the governor of Brasilia be removed. There is a feeling that he basically allowed this to happen because this didn't catch anybody by surprise. Supporters had been announcing for days that they would be holding a protest, and one of the state prosecutor has also ordered the arrest of the security secretary or former security secretary of Brasilia, who was also a member of Bolsonaro's government. And then there's a lot of talk that the government will try to arrest more people. There's at least 20 who have been arrested. And Lula himself and others have said that they will follow the money to see who financed this.
So what exactly does that mean financially? Is there a potential financial ripple effect?
Well, right now, markets were slightly on edge already with Lula. They weren't too sure about where he's going. There are certain policies that he hasn't been clear about how he will enact them, or some that weren't welcomed by the markets. So the feeling is that this will create more uncertainty. There's a piece today by our colleagues at Bloomberg Intelligence who explain this very well, and Bloomberg Economics, and they say that there will be more uncertainty around what markets expect from the government going forward, whether it will be more interventionist, and this may have an effect today at the open.
All right, thank you so much. Bloomberg's Rodrigo Orihuela there with the very latest on Brazil. Now, Bloomberg has also learned that Goldman Sachs is embarking on one of its biggest round of job cuts ever. The U.S. lender is planning to cut about 3,200 positions this week. More than a third of those will likely be from its core trading and banking units. Well, for more on all of this, we're joined by Michael Moore. He's Bloomberg's managing editor for EMEA Finance. So, Michael, thank you so much for joining us. What areas in Goldman Sachs are likely to be more affected?
I mean, this is pretty broad-based. You're seeing it not just in the businesses that are struggling, but also the trading unit that's done quite well this year. So it's pretty across the board. We had reported earlier that there would be a focus on the consumer banking business, where Goldman is scaling back their ambitions a bit after a really strong push in that over the last few years, an expensive push. So that's one area that's likely to face outsized cuts, but it will be across the board.
So, Mike, how big a deal is this? This is what, 6 to 7% of the workforce, but it's actually maybe worse or a little bit better than it could have been, because we were expecting at some point almost 4,000 job cuts.
Yeah, there's been a number of numbers thrown out there, but it was going to be a sizable cut, and some of this is Goldman specific, but a lot of it, gets back to something the entire banking industry is facing, which is in 2020, nobody really did many job cuts because of the pandemic, of the optics around that. 2021 was a hugely busy year, both on the trading side, on the investment banking side. Banks were hiring pretty aggressively to try to keep up with the deal flow. And now you've had things slow down. You have a more normalized environment, and banks that haven't done their usual annual cuts in a couple of years. So there has been kind of this build-up, headcount growing at a lot of the firms, and with revenue not keeping up or not expected to this year, I think you might see this at a number of firms.
So would you call it like a normalizing adjustment or things like that? Or is it because Goldman Sachs, first of all, maybe earnings weren't as strong as expected, but also there's a worry, I guess, that a lot of these banks will go through a downturn?
Yeah, there is that worry that things are not going to be as bullish as they've been for the past couple of years, even if interest rates will help the lending side of these businesses. So I do think you'll see some of this across the board in the industry. Some of it is Goldman specific. They've been under pressure to rein in costs to make this consumer push a little less expensive. So some of that I would attribute to the idiosyncrasies of Goldman.
What are we expecting overall? We're going into earnings season. What are we expecting from a lot of these Wall Street banks?
I think the big question will be their sentiment toward the deal-making, backlog, and whether things will pick up in 2023 after there was a pretty significant slowdown in leverage lending, in deal-making, in IPOs, obviously. So how quickly can that come back in a recessionary environment? And what is this trade-off with the lending side of the business, which rates are going to help there, but you'll also see an increase in provisions.
All right, Mike, thanks so much. As always, Michael Moore there, Bloomberg's managing editor for EMEA Finance. Coming up, China's borders have opened after 3 years of global isolation, so we see how the markets are reacting to that. That's coming up next, and this is Bloomberg.
more activity in the fusion world than ever, and not just in government research labs. There's also an emerging private fusion industry that's attracted billions of dollars in capital in recent years.
Governments and private investors alike realise that we've got to find a solution that's going to allow us to get to net zero targets.
This is one of the hardest but most rewarding problems that humanity could work on. Ultimately, we all want the same thing. We want someone to put electricity on the grid from a fusion power station as quickly as possible.
Frankly, the scale of the challenge, 3,000 gigawatts of fossil fuel to replace, there's not many things that can do that. In fact, there may only be fusion that can really do that.
And while many in the scientific community predict fusion power will take decades, some in the private fusion space believe we'll get there in just a few years, as soon as the 2030s.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, China has reopened its border on Sunday, switching 5-day quarantine for a 48-hour negative COVID test result. It sparked a homecoming rush and lured investors back to the region. Now, for more on all this, Sofia Ortega-Costa, our chief China markets correspondent, joins us. Sofia, thank you for coming on TV again. Now, the border reopening, is this really a watershed moment for China?
It really is, Francine. I mean, this is the first time in 3 years that Chinese nationals outside China can visit their families. And it's not just the fact that they can travel from outside China, but also within China. And this is really the economic story, the big macro play for this year, is the consumption revival within China. I mean, we just got the data from the Transport Department. I'm adding it up here. It's about 17 million trips were made in those first 2 days over the weekend, and about 2.1 billion trips are expected to be made ahead of during the Lunar New Year period. This is the key period it's the world's biggest migration of people. It's also the time when Chinese consumers are expected to have that consumption story really pick up. A revival in confidence. This is really important for the economy to pick up, and that's why we're seeing economists revise those GDP estimates for 2023 higher almost every single day, Francine.
So if you look at the tech crackdown in China, how much of a pivot is this? And are we sure that actually the crackdown gets tempered down?
Yeah, I mean, how many times have you and I spoken about that over the past 2 years? This is really different this time, and the reason is, I mean, we saw over the weekend Gu Shuqin, he's a very high-ranking official at the PBOC, China's central bank. He said that the tech crackdown, in his opinion, was nearing its end, and this is very strong words from a very high authority in China, really giving momentum to the China tech trade. You're seeing Alibaba close up in Hong Kong about 9%, just under 9%. And Alibaba is obviously the big story, the kind of the hallmark of the China tech crackdown. Jack Ma, a big figure there. And another reason also is because Jack Ma has lost control or given up control of Ant Group. The suggestion is that Alibaba's fortunes are not so interlinked with this slightly controversial fintech company that he was owning. Also, Morgan Stanley and Goldman Sachs both really raising their price targets for Alibaba stock this morning, and it's on Morgan Stanley's top pick list for the first time in 3 years. Francine.
Sophia, I know you're one, of course, of our great experts in terms of, thinking of Chinese economy, policymakers, and the like. How are you expecting the next 6 months to be? Is it going to be stop and start with a lot of these policies?
The only sure thing I can say is volatility. I mean, the problem is that people have been so scarred by what's happened over the past 2 years, not just when it comes to policy, but also the market performance. I mean, the confidence that you're seeing in markets, it's really just a mean reversion story right now. You're seeing that short covering. Morgan Stanley's quant desk has really good data on this. They're saying that the long onlys, your kind of long-term investors, the really sticky money, that's yet to come back. Flows are still low on that front. So really you can see the damage that has been caused by not just COVID-0, but also, let's not forget, common prosperity and the tech crackdown and the property market. I mean, the property market is still in the doldrums. That's still a story that China has yet to turn around. So investors will want to see the data that the economy is picking up, that consumption is picking up, and that Xi is really turning market-friendly. We don't know that yet.
Sophia, thank you so much for the terrific briefing. Sophia Horda Acosta joining us this morning. Now, UBS's annual Greater China Conference is also currently underway, bringing together investors and top leaders in business and finance. Bloomberg's David Inglis sat down for an exclusive interview with the UBS Asia Pacific President, Edmund Ko.
With the exit of zero COVID and together with some of the growth initiatives, I think the power pack of some of the growth initiatives will only come possibly towards the tail end of Q1. And that's because there's massive migration or transmigration of people during the Chinese New Year period holidays, and also low productivity during the 15 days of Chinese New Year festivities, together with more infections, we think. So real growth will come in, tilting towards maybe starting of Q2.
Talk to us about headcount, for example. We just heard from one of your peers, Goldman Sachs. They're looking maybe at some reductions in headcount. We all know, of course, your other peer, Credit Suisse, and the saga that they're going through. Are you looking to add talent this year, net?
We are. We clearly are. We are a different house. You know, when you are the preeminent wealth manager of the world, where we manage more than 3 trillion, I think it's absolutely important that when we look at all the elements before us, we are here to grow. And it's more of a franchise business than really hunting. Okay. So it's a very different setup for us than the other firms that you have mentioned. They are great firms, of course, but we are all on different paths as to how we craft out our strategy, etc. So for us, yeah, I'm here to hire.
Can you give us a number, rough percentage, in terms of, well, growth of the business and maybe what that manpower complement looks like?
I typically do not give forecast on numbers on headcount, simply because we are here to farm what is available, what is the best. Of course, we plant our own and grow our own in terms of graduate trainees program. That consistently we have been hiring every year. But for the rest, it really depends on the talent that are available and also the relevance to where we are growing in terms of sector and regional coverage. So it's quite different.
Business-wise, what do you expect to grow, though? Wealth management, asset management, IB. Is there any one of your major revenue streams that you feel most excited about?
I think our wealth management will power away this year because of what's happening in China, opening up and creating a more positive outlook for the whole markets, for investors. Investment banking, I think on the banking side should recover as well. And on the global markets, of course, volatility helps.
UBS Asia Pacific President Edmund Ko speaking exclusively to Bloomberg's David Inglis. Now let's get straight to a Bloomberg Business Flash. Here's Leanne Garrett. Hi, Leanne.
Hi, Francine. UK trade union leaders have been invited to talks today in a bid to avert further strikes on the transport system in the health service and also elsewhere. This week sees a pause in the rail strikes, which brought the network to a standstill in the first few days of the year. It comes after the boss of one of Britain's biggest transport unions called for coordinated strikes involving tens of thousands of public sector workers. Now, Ant Group says it has no plans for an IPO and will focus on its business. The statement came after it indicated that founder Jack Ma is giving up his controlling rights in Ant as a billionaire further retreats from his online empire. The company is offering 10 individuals, including the founder, management and staff, independent voting rights, effectively removing Ma's control of Ant. Goldman Goldman Sachs is embarking on one of its biggest rounds of job cuts ever as it goes deeper than rivals in shedding staff. According to our source, the process will start midweek with up to 3,200 positions affected. More than a third of those will likely be from within its core trading and banking units. And Richard Branson's Virgin Orbit says it's on course for Britain's first ever space launch this evening. After completing a vital wet rehearsal, the modified Boeing 747 jetliner named Cosmic Girl is set to climb above the clouds before the rocket blasts away. The new mission from Newquay and Cornwall will deploy 9 satellites for a whole range of customers. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Coming up, rampant inflation and continuing recession fears. What's the outlook for companies? We take a look at the 50 firms to watch in 2023. That's the big take. That's next, and this is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, with inflation sticking around and recession fears running rampant, what's the outlook for companies this year? Well, Bloomberg Intelligence has been hard at work compiling a list of 50 companies to watch in 2023. And joining us now is Tim Craighead, Director of Research Content for Bloomberg Intelligence. Tim, as always, thank you so much for coming on. So this is exciting. 50 companies that we need to watch out for this year in the next 12 months. How did you select these companies?
Yeah, so Francine, this is a list that is primarily from our broader list of focus ideas. And what makes that up? Companies where we have a really strong fundamental view, we think it's different from the market, but importantly, they're catalyst ahead to change perceptions. And this list, which spans all regions, all sectors, some positives, some negatives, is a list that focuses on those triggers in 2023.
Okay, so one of the themes, of course, is management change. Which company should be looking out for?
Yeah, there are three in particular that come to mind, and you think about what can get a company beyond the current turbulence and economic uncertainty that we're in, and a management changing focus is a big deal. Adidas has a new CEO coming in now over from Puma, where he did great things. We're looking for new endorsements, new kit, new product, etc. Another one is Prudential here in London. You think of it as a UK company, but it's not. It's wholly focused on Asia now with a big restructuring. They have a new CEO coming in February we think can take this a leap forward, which is also an interesting play on China. And then think Disney. Don't really need to go through this one. Bob Iger's on board. It's all about streaming now. It was hero to zero with the pandemic. We think there's a new leaf in the story coming out in 2023.
In terms of big themes, of course, EV is one of them.
Yes.
And that's not going to change.
No, I tell you, it's accelerating, if anything. Porsche, IPO last year, it was a big deal. We see a further acceleration in its shift to EVs this year. And you could see almost half the revenue coming from EV, half the production coming from EV in a couple of years. Another one is CATL, which a lot of people may not be familiar with, but it's actually the largest EV battery manufacturing globally. They feed into Tesla, they feed into Porsche, they feed into everybody. And with China really pushing EVs now as part of their stimulus, it's a big deal. It's not all positive, though. No. Allison Transmission, U.S. company focused on mid-sized trucks. That's another segment of the market that's going EV. Their traditional business can see a lot more competition.
So, Tim, the other thing, of course, is chip and tech, which we talk about day in, day out. Some of the supply chains have been heavily hit. What are the companies you're watching out for in that?
Yeah, this is, I think, a really interesting area because you've got the supply chain concerns between U.S. and China. You've got economic concerns about demand, valuation hit because of interest rates, etc. But with that, you've got some big companies, leading companies that have been pummeled, whose fundamental position as we look ahead, I think are quite bright. Think TSMC, the world's largest foundry. Think ASML. You can't make advanced chips without their technology. Microsoft is another one that's gotten absolutely blitzed, but yet cloud computing, is a big deal as we look forward.
Tim, thank you so much. And of course, Tim's piece is on the Bloomberg terminal, also on social media, and we'll push it out. Tim Craighead, Director of Research Content at Bloomberg Intelligence. Now, coming up a little bit later today, Rolls-Royce Chief Executive Officer Torsten Müller-Ottwos joins us to discuss the company's annual results. That interview live at 3:30 p.m. UK time, 10:30 a.m. in New York. We'll have plenty more, of course, Bloomberg Surveillance Early Edition. It's Matt Miller, Kelly Lyons, and Anna Edwards. This is Bloomberg.
The standard way venture firms work is you commit capital, let's say over a 5-year investment period, something like that.
Yeah, exactly. Right.
And then the fund is typically lasts maybe 10 years or so.
15. Well, these days longer. So often 15. Often the tail extends out to 20 years because these companies take a long time to develop.
And somebody that invests in a venture fund today should be trying to get rates of return of 20%, would you say, or more?
You know, top-end venture is sort of 3x net of fees. You know, you ideally, you're hoping for more than that. You're hoping for 5x or more. You know, you're illiquid the entire time, right? So you'd hope to get paid for the liquidity.
And today,
so yeah, maybe 20 to 40% if things go well is sort of baseline.
Let's take another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Mark Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? There's a high degree of intelligence, hard work, a lot of luck, dress the right part, don't wear a tie. What are the things that make one a good venture capitalist?
So the highly successful VCs historically are very idiosyncratic. You have people from very different backgrounds. Mike Morris is a former newspaper reporter. John Doerr is a former chip salesman. You've got people with very different, Jim Breyer has more of this kind of blue chip investment background. You have people with very different backgrounds and experiences. And so I think it's some set of skills and some set of knowledge, and then there seems to be a taste component to it that's really hard to measure and really hard to predict.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
This is Bloomberg.
As we move further into this year, as the environment gets increasingly challenging with the high rate environment, with the clouds hanging over the broader growth outlook, you're going to see businesses get more cautious.
This is going to be remembered as a V year when we recognized that we were headed into a different kind of financial era.
We will probably see that recovery within 2023, but not soon.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. Stunning violence in Brazil's capital. Security forces have regained control after thousands of supporters of former President Bolsonaro stormed Congress and the presidential palace. A ship that ran aground in the Suez Canal has now been refloated. That reopens one of the world's most crucial waterways for global trade. And it's one of Goldman Sachs' biggest rounds of job cuts ever. More than 3,000 jobs will be eliminated at the Wall Street firm. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. Kaylee Lines is on assignment. Matt, good morning to you. It seems that animal spirits reignited by, well, weakness in U.S. data.
Yeah, absolutely. The rally that we saw last week at the end of the week on Friday was the biggest we've seen in a month in U.S. stocks, and that optimism really made its way around the world. We see big gains in Asian stocks as well. It helps, of course, that they've dropped their COVID zero policy and they've dropped quarantines to enter the country. So now there's an influx of people, a lot of, I guess, families reuniting as Hong Kongers come back to the mainland. So that's part of the rally. MSCI Asia Pacific gaining about 1.7%. The Hang Seng up a little bit more, 1.9% this morning. The Nikkei in Japan is making some smaller gains as well. And we see the dollar today strengthening against the yen. Right now, 132 yen is the amount you can get for $1. Remember, we were all the way up at 146, 147, but we've been down in the 120s as well. In terms of U.S. futures, we are up this morning. It's not the same thing as you see in the Asian session, but of course we had ours on Friday, so now we're up 1/3% there. And we really see moves that set us up for a bigger rally. You see a weak U.S. dollar That's adding to gains in crude. It's adding to gains in Bitcoin right now, 17,247. So actual movement there on Bitcoin out of the $16,000 range. I will say, though, that as investors sell debt, the U.S. 10-year yield is rising, and those rising yields rival, of course, the yields that you get in stocks. So setting up a little bit of a competition there. Anna, what do you see in terms of the European markets?
Yeah, as US futures push a little higher, we push in aggregate a little higher on European equity markets, Matt, even though the picture across the map is a little mixed right now. Flat markets, negative markets in some places, but otherwise seeing some strength. Scandinavia looking pretty strong. The French market being down, weighed downwards by a downgrade on Danone, which is a food business, of course, heavily weighted in that particular market. So a mixed picture, but overall making gains lifted by the weaker data out of the United States having an impact on expectations around interest rates, but also, as you point out, Matt, the strength in the reopening story coming out of China. And it's the latter of those that's perhaps pushing higher on Brent crude. You mentioned, Matt, the dollar impact, that's in the mix too, but also the growth story out of China finally lifting Brent. It hasn't been something that has been lifting commodity prices, and commodities actually were a bit confused by the mixed nature of the data we got out of Friday's US session. Over to Brazil, though. Let's have a look at what we're seeing on a London-listed ETF of Brazilian assets. This in relation to, of course, the weekend's developments, the violence we've seen in Brasilia. And so as a result, those Brazilian assets listed here in London down by 2.2%. This is an interesting story. A small gains developer here in the UK, small in market cap terms, but is having an impact on other gains developers, which is why I put it on my board today. Apparently not as many people playing the F1 manager game as they'd anticipated. This business is the maker of that particular game, and as a result, very disappointing performance they describe it as, and that stock goes down by 40%. AstraZeneca down 1% today, but this is a business that is doing deals. It's doing deals in the biotech space, spending $1.8 billion on a US biotech business, and that being well received by investors, but the sector a little bit weaker today on what is a risk-on session broadly.
All right, interesting stuff, and I'll check in personally to the F1 management game there. Let's get to the big story of the morning. Brazilian security forces have regained control of Congress and other key government buildings after they were stormed by supporters of former President Jair Bolsonaro. New president, Luiz Inácio Lula da Silva, who was away at the time, has vowed to go after those who were responsible.
There is no precedent for what these people have done, but these people will be punished. We are going to find the financiers, and they will all pay with the force of law for this irresponsible, undemocratic gesture, this gesture of vandals and fascists.
For more on this, let's get to Bloomberg's Rodrigo Orjuela. Rodrigo, what has been the reaction in Brazil? We heard Lula's comments just now. We know he, wants to press charges to the full extent of the law. What else are we hearing?
Well, we've heard a lot of people come out who are not part of the Lula camp, who were close to Bolsonaro during his time in government, all come out and say, denounce this in some way or other, say that this should not be happening, that this is wrong, this is illegal. The word that's being used widely in Brazil is terrorism to refer to this. And on the more kind of specific legal side, one of the Supreme Court justices during the early hours ordered that the governor of Brasilia state be removed temporarily from his position. So this adds on to Lula's decision to intervene, as they say in Brazil, the state's power to control security forces there. So that's the biggest political move. And there was also an order from a prosecutor to arrest the security secretary of Brasilia state, who was part of Bolsonaro's government in the day, and whose whereabouts are unknown, though there is some talk that he's in Florida, which is where Bolsonaro is as well.
And I know you mentioned some of the wording being used here. I know that some have called this a coup attempt as well. Coming just 1 week after the inauguration of the new president, the old but new returning president, Lula, of course. And up to now, a lot of the focus in terms of assets then, Rodrigo, had been on whether we were going to see more fiscal spending coming from the administration. How is this changing thinking around Brazilian assets?
Yes, so we actually have a quite interesting reaction today from our colleagues at Bloomberg in economics on this. There was obviously some uncertainty when Lula took over as to where he was going to go with his economic agenda, and this put markets a bit on edge. Some of that has relaxed since then because he has indicated there are certain things like labor reform that he will not push ahead with. So the initial kind of decline in the real relative to euro had eased. However, the conclusion in this reaction is that there is likely to be more uncertainty, which is negative for the real, is negative for stocks, unless the government makes pretty clear in some way or other that they have completely done away with these protests and the situation and put it under total control. Obviously, that will come down to seeing how the security forces act over the next few days and what kind of control the government has over them. But until that happens, there will be some uncertainty. The faster that uncertainty is put to bed, the faster markets will likely calm down and go back to where they were last week.
Okay, Rodrigo, thank you very much. Bloomberg's Rodrigo Orejuela with the latest on developments in Brazil. Another developing story we've been keeping an eye on, certainly in the early hours of the European morning. A ship has been refloated after running aground in the Suez Canal and briefly disrupting traffic in the waterway that's vital for global trade. Bloomberg's Danny Berger has been taking a closer look at what happened here. Danny?
Yeah, and I know we're all sort of longing for the simpler time of 2021 when the biggest story was just a ship stuck in the Suez Canal, but this really isn't that. First of all, it only took about 6 hours to get this thing, 4 hours rather, to get this thing up and floating again. It was just described as a technical failure. The Ever Given in 21, that took 6 days. So the impact here, I mean, you really can't compare them at all. And for what it's worth, this ship this time around, there wasn't really the risk that it would get stuck. It's half the size of the Ever Given. It held up about 20 ships. They're now back on their way just after delay. And the Ever Given, you'll recall, in 2021, it blocked about $10 billion worth of marine traffic every single day. So this time around, things are up and moving again. A completely different story, Anna.
Danny, thanks very much. Danny Berger with the parallels and lack of parallels with March 2021 and the Ever Given. Thanks to Danny for the update there. Now, Bloomberg has learned that Goldman Sachs is embarking on one of its biggest rounds of job cuts, planning to cut about 3,200 positions this week. For more, we're joined by Bloomberg's finance managing editor, Michael Moore, who has details for us. Michael, good morning. Give us a sense of how widespread, actually, this is. Which are the areas that are being affected by these job cuts?
Yeah, it seems like you're seeing it across the firm. Obviously, we've reported before that the consumer banking business, which has been an expensive push, is going to take the brunt of this in terms of at least proportionally, but you are seeing it in the banking unit, the trading unit that's done quite well this year. So it does seem to be across the board. And some of this might be, you know, a couple years worth of cuts that have kind of built up. You know, in 2020, there was the pandemic. Not a lot of banks were cutting jobs. In 2021, it was perhaps the most active year ever. Banks were staffing up to try to keep up with that deal flow. So this is kind of, there's been some buildup, if you will.
We have, obviously, U.S. banks starting to report as well. A massive amount set to come out in one day. What are you expecting there?
Yeah, I think, you know, what we've seen is the investment banking side has been pretty slow. We're looking to see, you know, if there's going to be optimism for whether that changes in 2023. Interest rates are helping on the lending side. The question is, how much is that offset by credit provisions, and do the banks, you know, take a conservative view toward the economy and need to put more money aside for that?
You have 6 big banks coming on the 13th. Michael, thanks so much for joining us this morning. Bloomberg's Michael Moore covers banks for Bloomberg. Now let's get a look at some of the other stocks moving in pre-market trading in the U.S. this morning. First off, we're watching the iShares MSCI Brazil ETF. After the turmoil in Brasilia, it seems as though things are still being sorted out there, although fortunately all of the government buildings have now been, I guess fortunate depending on whose side you're on, have been freed up there. And right now we see that iShares MSCI Brazil Index ETF down about 1.2%. Next off, NVIDIA. Very interesting story here in big tech. And remember how big NVIDIA actually is. Cathie Wood's flagship fund, ARK, of course, sold more shares as the chipmaker rebounded from a nearly 2-year low. But NVIDIA is still a $365 billion stock. So this is a company that is bigger than Tesla. And speaking of Tesla owners swarmed showrooms in China over the weekend to complain about missing out on another round of price cuts. Those vehicles, some of the vehicles that Tesla sells in China are 40% lower than the same vehicles in terms of price made and sold here in the U.S. Anna.
Yeah, you're not getting over that one quickly, are you? That was one of our themes of last week. Coming up on the program then, Matt, we'll talk to Karen Chedid, an investment strategist at BlackRock. If you think inflation is going to be sticky, if you think that Tesla prices stay high, what does that do to your outlook for bond markets? And we'll also delve into the outlook for corporates this year. 50 companies to watch in 2023. Coming up, we'll dive into a few of the details of which companies Bloomberg Intelligence has picked out on their watch list. This is Bloomberg.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York. Anna Edwards in London. Kaylee Lyons is on assignment. And we are still, wondering over and pondering what the labor report that we got on Friday means for the Fed and for the broader markets. We had average hourly wage growth slow, but it's still climbing. And we had unemployment come down to 3.5%. That's the lowest level going all the way back to before even I was born, in the 60s. Joining us now to talk about what this means for the Fed is Bloomberg's macro strategist, Simon White. Simon, I can't help but think about NAIRU, the non-accelerating inflationary rate of unemployment. It's got to be higher than 3.5%, right? Which means that we're still looking at inflationary numbers.
Yeah, I mean, it's kind of interesting dynamics we have right now. You have, as you say, you've got this very low unemployment rate, but you have very big changes after COVID. So since, the last 3 years, payrolls has added about 2 million, which compared to the civilian labor force, which is maybe up like 5 million, it's a shortfall. And the participation rate we know has gone down. And really, it's been concentrated amongst the older workers, so like 55 plus, people that left the labor force after COVID, and probably have no real desire to return. And that's really changing the dynamics. That's going to make the Fed's job a lot more difficult.
And it's something that labour markets here in the UK have in common. There are differences, of course, but one of those themes, at least slightly in common with the US. So somebody found something kind of Goldilocks about what we heard about the labour market maybe on Friday, but also we got that services ISM print, which was really dire. And other people point to that and say that's actually what stocks rallied on. And was that well placed? Was it a good idea to rally on such dreadful sort of forward-looking data about the US economy? Sure, it impacts on what the Fed will do, but doesn't it just tell us something about how quickly recession is approaching?
Yeah, I mean, it doesn't make any sense because, I think it's very difficult to get a Goldilocks scenario in the first place. But if we even are in that situation, the Fed is going to try and keep higher for longer. So it can't really be a good thing for stocks. But I would focus on what's leading here, right? So the services ISM is leading. New orders component within the ISM is also leading. That collapsed too. And if you look at leading indicators, you look at the temporary help, which is the part of the payroll and jobs report that's the most leading, that actually jumped to negative growth. So we've now got negative growth in temporary help, and that leads the overall jobs market. So all the leading indicators are telling you that maybe we've added, it's a 3 months extra kind of timeline to this, but the inevitability that jobs growth is going to start falling, probably in the second half of the year, is very high.
Simon, we had a number of big names come out last week and warn that the Fed needs to be on lookout for lower than average inflation or even disinflation. You had the sensational Michael Burry tweet saying that in the second half of 2023, we're going to be in a recession by any measure. And then you had Raghuram Rajan, who has been saying for a while that the Fed needs to get ready for this kind of move. Are we expecting, inflation to come back down to earth and maybe even move lower in 2023?
It could happen. I mean, it's, I don't think inflation is necessarily mean reverting, but it can display some of these characteristics where things do overshoot when they go back. So I think you could have a possible period in the second half of this year where it does look like it's heading considerably lower. I don't think it's going to head to extremely low levels, say sub 2%. I think what it will do, what it did in the 70s, the mid 70s, is it basically troughs at a slightly higher level. So maybe it gets down to just pick a number, I don't know, 3-ish, 3.5, 4, and then kind of troughs, and people then start to worry about what happens next. It starts to rise again, and because it's rising from a higher plateau, potentially it makes yet new highs later on in the cycle.
Okay, so if inflation troughs at higher levels, then Simon, I mean, where does this leave the Fed in its assessment? We hear from Chair Powell tomorrow. Is he going to want to push back on some of the market response we've seen to data, which has been pretty risk on?
Yeah, I think so. I mean, look, they kind of want to make absolutely sure that they get the job done. Unfortunately, they focus on lagging indicators, so there's a very high risk that they do too much. And they push the economy into maybe a deeper recession than necessary. On the other hand, I think if they really do want to crush inflation, and they want to do that first time round and not have to go through what happened in the 70s where there's a few iterations, they probably do need to raise rates even more, like maybe another 1 or 2%, but it's not really going to happen, right? They've not really got the mandate for the deep recession that they probably need to fully snuff out inflation.
Okay, doesn't seem to be what the market is dwelling on today, at least. US futures pointing another 0.5% higher. Simon, thank you very much. Bloomberg's Simon White with the latest on the markets. And for more market analysis, check out the Markets Live blog. MLIV Go is the function to use on your Bloomberg terminal. This is Bloomberg.
got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Suppose somebody is watching and says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
Enjoy the excitement of a night of music at Boston Symphony Hall with BSO Now. Watch brand new Boston Symphony Orchestra performances, behind-the-scenes storytelling, and memorable archival concerts, all from the comfort of home. Use our free 24-hour trial and see why the Boston Globe calls it musically rewarding, and the Berkshire Edge says the orchestra has never played better. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards in London. Let's keep you up to date with the news from around the world. Here's the first word. In the UK, Prime Minister Rishi Sunak meets today with union leaders behind the strikes that have hobbled the country. Sunak is trying to avert further walkouts by rail, health, or other workers. Unions want immediate pay hikes. According to The Guardian, Sunak may be open to a one-time payment to workers. China is trying to change the narrative that nationwide protests prompted President Xi Jinping to abandon his COVID-0 policy. According to a timeline published by the official news agency, the leadership started relaxing COVID restrictions before the protests began. On Sunday, China reopened borders that were largely shut for almost 3 years. And billionaire Jack Ma is giving up controlling rights of Ant Group. It's a sign that Ma is retreating further from his online empire following China's tech crackdowns. He's mostly disappeared from public view since giving a speech that criticized Chinese regulators on the eve of the scuttled Ant listing in 2020. Meanwhile, here in the U.S., on Capitol Hill, new House Speaker Kevin McCarthy is rallying Republicans with promises to cut spending and strengthen border security. Still, in order to win the position, McCarthy had to give more leverage to the party's right wing. He promised a rule change that would allow a single lawmaker to call for a vote to oust the speaker. So I believe they will vote on that today, and it'll be interesting to watch this Kevin McCarthy's tenure kick off after he needed 14 votes to be elected Speaker of the House.
Yeah, absolutely. So eventually getting there, taking days and breaking with sort of history and precedent in taking quite so long to elect a speaker, and really underlining the difficulties that the House is going to have in passing any kind of policy, given the power that now exists with a number of people, and really changing our assessment perhaps, or making us revisit our assessment of what the midterms meant. We focused a lot at the time perhaps on the reduced influence of the former President Trump and maybe not enough on the composition of the House. Right, coming up, we will get back to markets. Karen Chedid joins us from BlackRock. What's his outlook for inflation? This is Bloomberg.
What are the moonshots at Amazon that are capturing most of your time and attention?
Well, we have a unique way that we look at big new investments, and I'm not sure it's right or wrong. It just happens to be our way. And we ask ourselves when we're considering something 4 questions. We ask, if it's successful, can it be big and move the needle at Amazon? Is it being well served today? Do we have a differentiated approach? And do we have competence there? And if not, can we acquire quickly? If we like the answer to those questions, we'll go pursue it with a single-threaded team that isn't distracted by the rest of the business.
When it comes to the stock, it has fallen significantly. Do you think investors are missing something, or has tech just been overvalued?
I have never tried to predict what the stock's going to do. And any time I've tried to a little bit, I've been wrong. I do really believe that in the short term, the stock market tends to be a voting machine. In the long term, it tends to be a weighing machine. We have a concept we talk about a lot at Amazon, inputs and outputs. And the ultimate output for a company is share price, and then other big outputs are free cash flow or profit or revenue. You can't really manage the outputs. You have to manage at the input level, and that's where we spend all our time. And so if you do the right things for the business long term, things tend to work out. I think we've had very good returns for investors, and I expect that to be true again.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
This is Bloomberg Surveillance 30th edition. Here's what you need to know. Stunning violence in Brazil's capital. Security forces have regained control after thousands of supporters of former President Bolsonaro stormed Congress and the presidential palace. A ship that ran aground in the Suez Canal has now been refloated. That reopens one of the world's most crucial waterways for global trade. And it's one of Goldman Sachs' biggest rounds of job cuts ever. More than 3,000 jobs will be eliminated at the Wall Street firm. I'm Anna Edwards in London with Matt Miller in New York. Kaylee Lyons is on assignment today. And US futures point higher, European stocks in the main on the rise then, Matt, as we focus on perhaps some of the Goldilocks elements of the US data and the China reopening story.
Yeah, it seemed investors were pleased with the fact that wage growth slowed in the Friday non-farm payrolls report. And as a result, we had the biggest rally that we've had in a month in U.S. stocks. Now, Asian stocks were up overnight. European stocks are gaining as well, and we have S&P futures rising about 0.4%. The yield on the 10-year is coming up, though, to almost 360, right now 359.30, as investors sell debt. Now, usually I feel like if they're selling debt, they have money left over to buy stocks. On the other hand, you do have a higher rate on the 10-year to compete with the yield that you get on stocks. So there's always that one hand or on the other hand story with the relationship between stocks and bonds. NYMEX crude rising as the dollar weakens, and really dollar weakness is a great risk-on indicator for stocks today. We really do see dollar weakness. As a result, anything that's priced in dollars seems to be rising. West Texas Intermediate up to $76.24 a barrel. Bitcoin rising as well, out of that $16,000 range, now at $17,262. In terms of, should we look at the pre-market movers here? We're always watching what happens around global turmoil. You have the problems that we saw in Brasilia with supporters of Bolsonaro storming not only Congress there, but the Supreme Court and the presidential palace. As a result, the ETF that follows Brazil stocks is down, although those demonstrators, I guess you could call them demonstrators, have been pushed out, and 400 arrests were made. NVIDIA right now up 1.6%. So NVIDIA showing gains, even though Cathie Wood's flagship fund, ARK, sold more shares as the chip maker rebounds from nearly two-year lows. It's a $360 billion stock. So it's worth even more than Tesla. Tesla gaining as well, almost 2%, even though Tesla owners swarmed showrooms in China over the weekend to complain about missing out on another round of price cuts. You can now get some models that Tesla produces in China for 40% less than U.S. consumers will pay for those models made in America. Anna, what do you see in terms of European stocks?
Yeah, well, a couple of stocks they're moving despite the news flow there, Matt. We've got European stocks moving higher, up by 0.4%, but actually a lot of dispersion, a lot of variation around that theme. Broadly, the China reopening story and some of the data out of the US being weak enough to trigger risk-on sentiment, seems to be what is lifting markets. But we do have a lot of divergence between France and Spain on the one hand, and the Scandinavian markets doing much better. Brent crude is up, and energy stocks are that's one of the sectors that is moving higher. Brent crude is up by 3%, perhaps deciding to focus on the reopening story out of China. It's been a difficult thing to try and pin down the relationship between that story and commodities. It's not been entirely linear. This is the iShares MSCI Brazil ETF listed in London. So Matt, you were talking about one of the pre-market ETF moves that you're seeing Brazil-related assets there on the move in the US. Well, here we're open and trading, of course, in London, and this is one of the ETFs that reflects that negativity around the politics. AstraZeneca is down by just over 1%. They're doing deals, AstraZeneca, over in the United States, spending $1.8 billion US, which is maybe kind of small for a business the size of AstraZeneca. And analysts actually responding pretty positively to what they're doing here, but this is a sector that on a risk-on day is struggling a little bit here in Europe, Matt.
All right, so we'll keep paying attention to those stocks. Right now, I want to get to the bigger market picture with Karen Cheddid, BlackRock, Head of Investment Strategy for iShares EMEA. Karen, thanks so much for joining us this morning. Let me first ask you about that supposedly Goldilocks number that we got on Friday, the non-farm payrolls report. We added more than 200,000 jobs, but it was the least amount added in 12 months, and the average hourly wage growth slowed. Does that mean that inflation is going to be kept under control and the Fed can ease off its monetary policy increases?
Not quite. I mean, when we look at the payrolls number, I think, as you said, the Goldilocks term is coming back. They're not too hot, not too cold, coming back into all market commentators' lingo. But I don't think it's time to bring back the Goldilocks playbook, market playbook, as it were, because this is different to the Goldilocks of the past decade. On the one hand, we did see that wages are coming off a bit, but when we consider where wages are relative to the Fed inflation target of 2%, we're still quite some distance from where the Fed wants it to be. So I don't think this is the mix that's going to get the Fed to back off. I think the Fed is very much focused on the hike and hold this year, as opposed to the reversal to cuts that the market is pricing in. So not the Goldilocks risk rally that we'd expect.
Okay, so Karim, I spoke to good morning to you. I spoke to a couple of guests this morning who've been talking about the pace at which they think inflation is going to be coming down. One guest on Bloomberg Radio earlier on today was saying he's really in favor of fixed income right now because inflation is going to be dropping. I don't sense that you think inflation falls to such, more normalized levels.
So I think, it's all about the trajectory. So the drop from the peak to, say, 6% is much easier than the next leg of the drop in inflation down to that 2% that the Fed is still targeting. I think that next leg is going to be a little bit more stubborn. We're getting quite excited about the disinflationary figures that we're getting, and obviously we have the CPI on Thursday, so more to come. But I think that next leg might surprise markets in how persistent it could be.
So does that limit your enthusiasm for fixed income then, as a result?
So actually, we do prefer fixed income to equities. We do have an overweight on fixed income. And I think in that fixed income overweight, it depends where you're looking at. So duration might still be a bit more challenged for the points that we're discussing now, around inflation and around just how carried away markets have gotten in terms of their pricing of the Fed versus what we think the Fed will do this year. But there are other pockets of fixed income that look pretty exciting, like credit, where we have a very strong preference versus equities.
You're not concerned about a jump in defaults this year? I know Matthew Mish at UBS, for example, has forecast we could get to 9% in terms of defaults. And even if you look at other areas of credit, you've seen, for example, banks start to raise loan loss provisions. You've seen more leveraged loans last year than you did any year since, I think, 2007. So you're starting to see the cracks appear.
Yeah, I mean, there are certainly some signs of stress starting to appear, and usually when you head into a recession, which we do think is playing out at the moment, you do want to be a bit more cautious with the credit risk that you're taking. But you know, when you look at credit spreads, IG is an area where we do have conviction. We do think that the valuations compensate you for those risks. And then when I bring it back to what we're seeing in ETF flows and what investor positioning looks like, it's been a pretty interesting ride for credit ETFs. If you look at the second part of 2022, you know, 2022 was a big year for fixed income. We hit a record with fixed income ETF flows. The first half of the year was all safe haven into duration exposures, especially dollar assets. But the second half, and this is carrying into the first week of 2023, is a surge into credit buying, you know, especially because these pockets of the market are yielding something when for a very long time they didn't.
Do you like credit better than equities because of the risk in terms of earnings? I noticed that bottoms-up analysts are expecting $230 this year for the S&P 500. Top-down analysts are looking at more like 210 or even 200.
Yep.
There's a big divide there, and I guess, you know, Q4 earnings are about to kick off, so we'll get a taste of what's to come.
Yeah, I mean, I love the divide that you just highlighted. It does show why in equities you got to be selective in this environment as opposed to really focusing on that macro top-down equity call, which is why we remain underweight there. But when you think about that credit to equities preference, absolutely, you hit the nail on its head in that we do like credit more than equities in a recessionary environment, especially where earnings have so far held up better than expected. So the pain in earnings has not come yet. The season kicks off on Friday. We do expect Q4 growth to hit 0 or less in the US. Europe, the mix is a bit different. Europe has had tailwinds from a weaker euro for the large caps, which have boosted numbers more than expected so far. But the pain is yet to come in earnings. It's all got to be selective on sectors as well.
So pain is still to come on earnings. And one of the areas of the European earnings space that had benefited Europe last year was energy, of course.
Yep.
We saw that part of the European equity landscape doing pretty well. Does that continue, despite the fact we've seen certainly gas prices coming off highs?
Maybe not to the same extent of 2022, although I do think, you know, for the energy sector, the integrated energy sector in Europe, there can still be opportunities, especially given that we haven't seen the full effect on their profits in 2022. That's still carrying forward. One other area in European equities, while talking sectors, is luxury. That's starting to come up as, you know, you don't typically expect those types of consumer sectors to do well in a recession. But luxury,
China.
Yes, China tailwind of reopening, foot traffic back to luxury goods and stores in Europe is on the rise. So the data is suggesting that this sector is also well positioned.
And we eventually might see more Chinese travelers into Europe, which would be another thing to watch. Thank you so much, Karim. Good to see you. Thanks for joining us. Karim Chedid here in the studio in London from BlackRock. Coming up on the programme, the top 50 companies to watch in 2023 as picked out for us by Bloomberg Intelligence. We'll dive into a few of the stories behind their big take story today. This is Bloomberg.
Top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave
in China, nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. Kaylee Lines is on assignment today. Now, from Disney to Porsche, Bloomberg Intelligence has identified 50 companies worth watching this year based on growth prospects, management changes, and plans for new products and services. Bloomberg's Joe Easton joins us now to take us through the detail. Joe, before we get into any stock specifics then, what are the broader themes? I mentioned a couple of them. What are the broader themes that have helped companies sort of qualify for this 50 to watch list?
Yeah, so I think what we'll see is a kind of repricing of some of the issues that we saw last year. So we're looking at areas like real estate, got a few companies in there, particularly in the UK, and also renewables, which is another strong area in the report from BI. And then the China reopening still plays into the big thing. So there's a few companies on there that stuck out, like Prudential, and areas of the financial services sector exposed to Asia could see a bit of recovery. So I think it's those beaten down sectors that are sticking out in this report.
Okay, and what about specific companies? We've got a few of them on that graphic for our radio audience. Well, I won't read them all because there are 50, but take us through a few of the highlights.
Yeah, so a couple for me that stood out. Glencore's an interesting one in the UK. This is really because their coal business is doing well, which is kind of something that nobody really expected. Coal was kind of the energy sector that was sort of seen as in the past now. But given gas prices have gone up so much, coal is now seen as a short-term kind of stopgap for the sector. So that's an interesting one, bit of a strange one. Novo Nordisk is on there because they're doing very well in the obesity and diabetes sector, which is really strong. There's a lot of excitement around that among analysts. So those are probably two of the stocks in Europe that I like the most.
I love the coal theme, right? Who would have thought that global warming would be celebrated for thwarting an authoritarian dictator making a war in Eastern Europe? Let's talk about some of the U.S. stocks, though. Netflix is one that I think is interesting. As you know, it's such a volatile stock, hinging on, I guess, subscriber numbers and the kind of margins that they can keep.
Yeah, that's right. And I mean, we saw that huge sell-off in subscriber numbers and the stock price around, I think it was around 6 months ago, and it's now kind of stabilized a little bit in terms of the numbers that they report on the quarter. So the next thing will be whether there will be another hit to those subscriber numbers as interest rates continue to come up and then ease off, and also as we really see the worst of the economic downturn in the US and around the world. So that'll be key for Netflix. They've obviously had some big hits out recently. I watched the Glass Onion film at the weekend. I was a little bit confused by it, but I thought it was pretty enjoyable. So they've still got those key titles that are attracting subscribers to Netflix, I think.
I will say I thought Knives Out, the original, was far better. Anna, have you seen both of those films?
No, I speak with no authority on this subject, so I'll go no further.
All right, well...
I have to agree. I have to agree. The first
I'll put it on my list.
Yeah.
The first one is better.
Definitely, I would say so.
Okay, well, there you have it. That's authoritative. What about the UK real estate sector, Joe? Something that I know we talk about fairly often. How can that feature? Well, does it feature for positive reasons, given a rising rates environment?
I think so, and I think that's because of how much the valuations have come down. So the valuations have come down around 35% in terms of the stock prices, and the value of property in the UK is probably only expected at the worst end to trough at around 20%. So there's already a cheapness in those stocks. And I know that Tim Craighead and the BI guys put Shaftesbury on their list. They own the West End theatres around London, so they're probably the biggest investor in that area, and there's definitely some value in those stocks, I think.
Okay, still an emphasis on getting out and socialising rather than the buying stuff, perhaps then. Joe, thank you very much. Bloomberg's Joe Easton with the latest on that Big Take story. NI Big Take is the function to use on the Bloomberg terminal to read it in full. Coming up next, President Biden's contentious border visit. More on what it means for his meeting with the Mexican president. That's looming on the agenda. This is Bloomberg.
Stronger that moment that you're lifting the barbell. You get stronger as your body is making repairs, making recovery. Recovery is a when and how you get fitter, faster, stronger.
Recovery technology includes everything from massage guns and foam rollers to compression boots, hyperbaric chambers, cryo chambers, infrared saunas, and even infrared pajamas. And athletes are partnering to become investors to take those products mainstream.
When you look at tech and sports right now, it's completely innovating the way training's going, completely changing the way recovery's going. I think sky's the limit as far as where it can go.
But while some of these products can feel amazing, it can be difficult to differentiate between what really helps the body and what just tricks the mind.
Every time you're chasing the latest, greatest, newest tool, you're probably chasing a mirage.
Lots happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.
We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards in London. Kaylee Lyons is on assignment. Let's get a look now at what's ahead today. The key market-moving events that we're watching out for this week as well. We got U.S. President Joe Biden in Mexico for the North American Leaders Summit today. And then tomorrow at 8 a.m. Eastern Time, Fed Chair Jerome Powell takes part in a panel discussion on central bank independence in Sweden. Thursday, we get U.S. inflation figures. This could be the big one, folks. Plus, was it a Christmas bonanza for UK retailers? We'll get updates from Tesco, Marks & Spencer's, as well as, apparently it's ASOS, but I feel like it should be ASOS because it's as seen on screen, right? Friday, it's all about Wall Street. A host of banks are reporting earnings, including Bank America, JP Morgan, Citi, and Wells Fargo. Tons of banks coming out with Q4 earnings on Friday. Now let's get more on President Biden's trip to Mexico. He's going to meet with the Mexican president and Canadian Prime Minister Justin Trudeau as well. We're joined by Rosalind Matheson, Bloomberg Senior Executive Editor for Government. And I know, Roz, the president is going to visit the border as well. And this is a huge political topic for the U.S. What do we expect?
Well, that's right. So this meeting is what's known as the Three Amigos between the leaders of Canada, Mexico, and the US. And of course, the relationship between those countries is arguably on a better footing since Joe Biden came to office. But there are still real issues here. And one of them, as you note, is migration. And the other one, of course, is drugs. And so you're going to see sort of pressure for some sort of tangible progress from the US president with Mexico on this issue. What he did is he recently announced a program where they will allow some migrants from some countries who apply to come in to the US, but those who just show up at the south border, they'll probably not be let in. So he's trying to placate those who are on the border states who say we can't just have people continuing to come across unhindered and allow a pathway for some migrants to come in, particularly to add to the workforce in the US. So there seems to be an understanding with Mexico that that's something that they can do. So you can expect some conversation around that. You can expect possibly an announcement that they've agreed in full to do that. But obviously also there's going to be conversations around the drug trade. And of course, the events in Brazil yesterday will come into this meeting either way.
Yeah, of course, the problem is that a lot of these migrants come in regardless of whether or not they're allowed. And the allegation is that they bring deadly drugs with them. That's the Mexico-U.S. part of it. What is Justin Trudeau going to do at this meeting?
Well, they've made clear they actually don't want to really talk about energy policy that much. And of course, that's an issue of contention with the way that the president in Mexico, López Obrador, has been pushing his nationalization, his protection of the energy industry in Mexico. And Justin Trudeau has said, well, we actually don't really need to come at that this time around. We can talk a little bit about sort of, again, migration and drug issues, but this really seems to be more of a get-to-know-you kind of conversation and just setting the floor for some further conversations down the track. It doesn't seem as though Canada is coming with major tangibles out of this. Of course, the Mexican president wants funding for a big solar project, which is sort of on the border area with the US, so he might even hit up Canada for some of that. But it seems like the real issues here are between the US and Mexico, and of course, it's going to be sideswiped by the events in Brazil.
Yes, and let's get to those then, Ros, because you mentioned them a couple of times. I mean, how long is our attention going to be on this story? How long does it develop for, I suppose? Security services now largely in control of what's going on in Brasilia, but some in the Lula camp calling this a coup attempt. Where does this go next?
Well, that's right. There are still quite a few Bolsonaro supporters in the vicinity, even though they've arrested about 400 and they seem to be in control now of the buildings. But of course, there's a lot to play out here. One of the big questions is what happens to Jair Bolsonaro, who's currently in the States, ostensibly on extended holiday in Orlando. Does the US need to somehow get him back to Brazil? If so, is he tied up in this? Does he face claims of that? Does he get arrested if he comes in? And how much can Lula keep all those factions at bay and start to try and enact an agenda? So there's a lot to play out here. And as we saw with the attack on the US Capitol, of course, there's a long tail to these events because beyond the immediacy of what happened, they show just how polarized the country is, a bit like the US.
Yeah, is there read across from Capitol Hill, from Washington, to what we saw in Brasilia, Ros?
Well, there are similarities and there are differences. Of course, the claim here is that some of the police officials and local officials in Brasilia possibly were complicit in this, and it was planned. It wasn't just sort of an opportunistic moment, let's go and storm some buildings in Brasilia, whereas in DC, it just seemed like the police force was overwhelmed by the size and scope of it. So that's one key difference, and how it then plays out in Brazil as they try and put federal control in the capital, as they put some of these officials to one side and say, well, hang on, is there a conspiracy here that you were involved in? So that's one key difference. But the overarching similarity is, again, these are societies and government and countries that are severely polarized, and that runs through well after these events themselves have passed, as we've seen with the recent turmoil in DC over the speakership of the House.
Ros, thanks so much for joining us. Rosalind Matheson joining us there with the outlook for Brazil and some of the North American geopolitics beyond. That is it for Early Edition. Surveillance is ahead. Tom, John and Lisa will be with you. This is Bloomberg.
The standard way venture firms work is you commit capital, let's say over a 5-year investment period, something like that.
Yeah, exactly. Right.
And then the fund just typically lasts maybe 10 years or so.
15. Well, these days longer. So often 15. Often the tail extends out to 20 years because these companies take a long time to develop.
And somebody that invests in a venture fund today should be trying to get rates of return of 20%, would you say, or more?
You know, top-end venture is sort of 3x net of fees. You know, ideally you're hoping for more than that. You're hoping for 5x or more. You know, you're illiquid the entire time, right? So you'd hope to get paid for the liquidity.
And today,
so yeah, maybe 20 to 40% if things go well is sort of baseline.
Let's take another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Mark Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? There's a high degree of intelligence, hard work, a lot of luck, dress the right part, don't wear a tie. What are the things that make one a good venture capitalist?
So the highly successful VCs historically are very idiosyncratic. You have people from very different backgrounds. Mike Morris is a former newspaper reporter. John Doerr is a former chip salesman. You've got people with very different. Jim Breyer has more of this kind of blue chip investment background. You have people with very different backgrounds and experiences. And so I think it's some set of skills and some set of knowledge, and then there seems to be a taste component to it that's really hard to measure and really hard to predict.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, China Open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Count Under the Close. Welcome to Bloomberg Crypto.
The Fed is going to be late.
I think that the Fed is imposing a severe slowing on the economy.
They'll pause if inflation is declining, but they won't be able to if they're not achieving their inflation objectives.
They're looking for slower inflation, but still nowhere near target.
The Fed, as well as every other central bank in the world, got it wrong. They said, oh, transitory, transitory, transitory.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, this is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Equity futures up 0.4% on the S&P. I know we do this every single Monday morning, but forgive me, TK, what a week coming up.
What a week coming up, but it's inflation report centered on it. But I want to go back to Friday, John, in our opening comments. Folks, I wish you saw Big Little when we're getting ready, particularly on a Monday, because we're talking about what happened over the weekend. I think the zeitgeist got it wrong over the weekend. They're talking about a good jobs report, blah, blah, blah. And there was that ISM report that you mentioned, which really showed a slowing economy out there somewhere. Boom, up went equities.
I'm with you on the boom. Payroll's got all the credit for the move in Friday's session.
I just don't buy
I saw
it.
the reporting over the weekend. The ISM, that week print that came up about 90 minutes after that payrolls report, that's what really drove the front end of the yield curve in America much, much lower, 20 basis points lower at the front end.
So there was this feeling in the employment report that perhaps you've got a Goldilocks scenario or soft landing where wages are coming in even though there's a strong report. And then the ISM seemed to give that a double whammy punch and basically saying, look, you're going to have weakness. It's going to soften enough to bring some of the focus off the Fed. Whether that's enough to stick through the CPI report on Thursday and then bank earnings on Friday this week, very another story.
And Chairman Powell speaking tomorrow, Tom, off the back of all this data. One of those curious moments in the global economy, for the US economy more specifically, we've got the ISM on manufacturing and services in contraction and a Federal Reserve that's set to hike interest rates again, Tom, in the next couple of weeks.
We're going to a recession frenzy here. We got the earnings coming out as well, but overarching this, and it's not the Goldman Sachs story. We'll have that a couple times here this morning, their layoffs. But John, what I would really focus on is the dovetail here of not so much China, but on this Monday, the Pacific Rim signals it's opening up. We can go into that later, but I would overlay that on the things we'll hear from Chairman Powell.
Well, I think we can talk about it now. So number one, China reopening. So they've dismantled that final barrier to entry into the Chinese economy, into the country. You can enter, Tom, now without quarantine. 1, 2, we're reporting here at Bloomberg that they're at least considering wider budget deficits. So that fuels the reopening. But Tom, if you've seen a move in emerging market equities, re-entering a bull market, that's a 20% move of the October low.
Yeah.
That's a monster move in EM equities.
My litmus paper here, folks, is the ADXY, the JP Morgan series, which is the currency pairs of the Pacific Rim, ex-Tokyo, ex-Japan. And that's, you know, it's not back up to where it was in 2019, but it's a nice move down, and it's spike up like equities.
Equity futures right now at 0.4%. Let's whip through the price action for you on the S&P 500 and beyond. We snapped a weekly losing streak last week on Friday with a big move higher. That move continues up 0.4%. Mike Wilson and Morgan Stanley, 3,900, Tom. Easy sell. That's the note that comes from Mike this morning.
Yeah, well, they're out there. They're confirmed. And this is, again, as he made clear, this is not macro babble. It's off of earnings and such. And I believe on Friday we dive into that.
Yields much lower on Friday's session, just a little bit higher this morning. Lisa, we're up by 3 or 4 basis points on a 10-year, 359.67.
And how much of that weakness that we saw, the softness, yields going down, a price going up, so perhaps strength in the actual price, how much is really driven by Europe? And I have to ask that, especially as we saw lower than expected CPI prints from Europe, but also this incredible rally in the Bund by some metrics, the strongest first week of the year going back to before 1990. Today, we get a sense of central bank speak ahead of Jay Powell tomorrow. Atlanta Fed President Raphael Bostic at 12:30 p.m. Bank of England Chief Economist Hugh Pill at 5:30 p.m. in New York. I'm curious to see both sides of the Atlantic and how they're dovetailing with perhaps a better than feared winter and some of the energy prices as a pressure. Also just want to mention this, Austin Goolsbee officially becomes today the Chicago Fed president. Today also the Three Amigos Summit is planning to start. U.S. President Joe Biden is planning to meet with Andres Manuel Lopez Obrador of Mexico and Justin Trudeau of Canada for this North American Leaders Summit in Mexico City. How much is really some of the immigration going to be one of the contentions, especially after the controversy that President Biden has been fending off with some of the biggest numbers of apprehensions and encounters by Customs and Border Patrol going back several decades. And after market kicking off the earnings release system, the holiday of bank earnings, we're going to be getting Jefferies, Q4. How much they give a sense of what we're expecting to hear from JP Morgan, Bank of America, Citigroup, Wells Fargo, all coming out on Friday after a tumultuous year. And John, some of the worst returns when it came to profits from banking, from their bread and butter, going back to 2009.
Hey, Lisa, thank you. Joining us now is Laurie Cavacina, Head of US Equity Strategy at RBC Capital Markets. Laurie, let's start there where Lisa finished. The bank earnings this week. What are you looking for from the likes of JP Morgan and others to get a broader read on what's happening here?
Well, I always love hearing the comment from the banks about what's going on in terms of consumer deposits. We also like hearing, a lot about what's going on with our corporate clients. So that's really, frankly, I care a little bit less about the actual bank earnings, and I care more about those macro tidbits that we're going to get. But I have to tell you, John, I pulled up this morning just looking at my Bloomberg about the sector performance over the past month. Financials have actually done pretty well on a relative basis, and I never like that setup when financials have outperformed heading into reporting season because there's usually not that great of a setup, but we'll see what happens on Friday.
Lori, I'm fascinated by the interviews we have away from your expertise talking about buy quality, which means Apple and 3 other stocks. Are there quality small caps? I mean, if somebody says in a big cap area, I want quality, can Lori Calvasina say that in mid caps and small caps?
You can. It's on a relative basis, and you don't necessarily, have the ability to come in and make the argument and say your top quality small cap is better than, kind of your top 20% quality of large caps. But within the small cap space, you do generally tend to find that stocks with better ROEs, positive earnings tend to outperform over time. You really kind of have 2 different worlds within the small cap indexes. You have the teeny tiny micro caps that have no liquidity, nobody trades them, nobody pays attention to them. And then you have that kind of upper echelon that does have some pretty good quality. Now, those typically get to be pretty crowded by small cap managers and typically get to be pretty expensive. But one of the reasons I love small caps right now is that upper echelon of market cap is actually pretty reasonably valued, and we don't get an opportunity to buy those high quality small caps like this all that often.
Lori, how concerned were you, though, by the ISM print that we got on Friday? The services component, supposedly the strongest one, coming in contraction.
Look, whether or not this is a recession, something close to it, something that kind of smells like it but isn't quite is one, whatever it is, we need to go ahead and get it done. We need to go ahead and get it started from an equity market perspective. And obviously there's a human cost to that, and we're not being disrespectful of that, but from a market pricing perspective, markets typically actually do well in negative GDP years and don't do well in sluggish GDP years, and that's historically because markets really can't handle that. Will we, won't we, will we, won't we? They just want to know, they just want to rip off the Band-Aid and get back to business. I think that certain parts of the equity market, like small caps, have been pricing in a plunge in ISM manufacturing for quite some time. The services side, though, is really what's been kind of feeding, kind of the inflationary fears. And so I do think we needed to see some damage there, really to kind of get this inflation narrative under control once and for all.
So we talk about what's priced in, right? That's been a sort of one of the big question marks for a lot of the analyst reports that we've been reading. And you took a look at how tech, consumer discretionary, and communication services stocks accounted for 95% of the decline last year on the S&P. But tech is still overvalued by some measures. So at what point, how much more damage is necessary in that sector to become appealing to you?
So I think that tech is an area, if we do get another bout of market volatility in the first quarter, and I do think that we're probably going to see that once reporting season sets in, I do think that tech is going to have a problem because I do think that that's where some of the earnings expectations do still need to be pulled down. And typically, we really want to buy tech as a recovery story, so we need to put that market bottom in before we can really get to a point where you want to buy the tech sector. But we go back to this quality issue, Lisa, because if I take a look at all the S&P 500 sectors and rank them in terms of quality, that classic tech sector, software, semi-hardware, that component, that really ranks as the highest quality part of the S&P 500. So you might not necessarily get super cheap valuations before investors will move back in. But you do probably need to get better valuations or at least more certainty around valuations than what you've got right now before you'll really see sustainable buyers come back.
Lori, I spent the weekend trying to calibrate the gloom. In economics, we're seeing a lot of gloom. Are you seeing in investment and its linkage over to finance, are you seeing a lot of gloom from RBC Capital clients?
We do. I mean, I spent a lot of time in December overseas talking to non-U.S. based investors. And I would say what was surprising to me, Tom, is that the sense of gloom was probably not as dire as I would have expected and not quite as dire as what I would have seen just from talking to U.S. based investors. Still pretty low. But I got the sense that talking to non-U.S. based investors, they were starting to sense opportunities out of the U.S. And so they were still concerned generally that the U.S. was overvalued. But I was hearing actually sort of a benign discussion coming out of European-based clients in particular. And that was something that surprised me. It felt like maybe we had in certain corners of this market really saw that gloom start to recede just a little bit. And that is something you do tend to want to look for at market bottoms.
You can feel this hope, can't you, for 23, that this is the year that you get that international outperformance, Tom. We
said the same thing 12 months ago.
I think we said it the year before,
and the year
before that, I know. Laurie, thank you. Just fantastic. Laurie Cavacina of RBC Capital Markets. Big week ahead. CPI later this week. JP Morgan earnings on Friday. Chairman Powell tomorrow. Speaking of the gloom on Goldman Sachs trading floors, I'm sure, Tom, this morning. Our latest reporting indicating 3,200 jobs could go. I wasn't aware of this, but the stat in our reporting, 34%. Headcount was up 34% since the end of 2018, Tom, at Goldman.
Was that different than tech? Is it different than
we're talking about where the excess is and where the excess needs to be removed. And tech and the world of finance right now, I think, hand in hand on that front.
49,000 employees. 3 is what, 7, 8%, 6% or so. Normal this time of year is a 3 or 4% clear out. That's just healthy for the industry. Peter Diateris had a great chart out this morning showing the differences between the major banks holding it together and other more entrepreneurial shops like Goldman Sachs really, off the mark. And that's why you're seeing this morning.
You mentioned that normal clear out, and Shanali Basak will join us later in the hour to talk about this. Goldman hadn't had that normal clear out in the pandemic. It was avoided, Lisa. And I think that's why a lot of people think this number is larger, because you've got to account for what didn't happen in the previous few years.
The culling of the ranks, sort of trying to get the quality. It's interesting that more than a third of those cuts are going to be from the core trading division, though. So this is a broad-based kind of cut, not just the consumer banking industry.
It's rumored surveillance is going to have a 1/3 reduction. I mean,
Where are you going with this? Which one of us is it?
I was about to say, is there something
like
you're not telling me?
It's something we don't know, Bramo.
Please, do collaborate.
TK.
Maybe in the break.
TK. That's me. Coming up in the next hour, Alessio De Longa, Senior Portfolio Manager at Invesco Investment Solutions. He'll be here. One of us might not be. Futures up, 4/10. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The capital of Brazil is recovering from an insurrection by thousands of supporters of former President Jair Bolsonaro. Rioters ransacked Congress, the presidential palace, and the top court in Brasilia on Sunday. It took hours for security forces to regain control. New President Luiz Inácio Lula da Silva is vowing to prosecute the rioters. In El Paso, Texas, a confrontation between President Biden and Governor Greg Abbott. Abbott handed the president a letter demanding that he act immediately to stop unauthorized immigration. Since President Biden took office, the U.S. has experienced a large increase of migrants trying to cross the southwest border. In the UK, British Prime Minister Rishi Sunak meets today with union leaders behind the strikes that have hobbled the country. Sunak is trying to avert further walkouts by rail, health, and other workers. Unions want immediate pay hikes. According to The Guardian, Sunak may be open to a one-time payment to workers. China is trying to change the narrative that nationwide protests prompted President Xi Jinping to abandon the COVID-0 policy. According to a timeline published by the official news agency, the leadership started relaxing COVID restrictions before the protests began. On Sunday, China reopened borders that were largely shut for almost 3 years. And Goldman Sachs set for one of its biggest rounds of job cuts ever. Bloomberg's learned that Goldman is expected to eliminate about 3,200 jobs starting midweek. More than a third of those will likely come within its core trading and banking units. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Lisa Mateo. This is Bloomberg.
Multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg.
Over the weekend, rioters ransacking Brazil's capital. Thousands of supporters of ex-President Jair Bolsonaro storming the presidential palace and top court in Brasilia, testing the leadership of President da Silva just a week after he took office. TK, just phenomenal scenes over the weekend.
They really were. The imagery was really extraordinary, and I would suggest it's a story still unfolding. What I did find interesting in the reporting, John, is how many of the Bolsonaro crew, the leaders, seem to be in Florida or seem to be in the United States. You wonder about the convenience.
Sure, I want to be very clear here, though, that the former president actually denounced this, came out,
yes,
Tom,
yes, yeah.
and did not like what he was seeing. and said that peaceful protest is one thing, but going after the institutions and breaking in is quite another.
Yeah, Bloomberg with a huge contingent down in Brazil, and we'll have reporting on that through the day. No question about that. It's a story moving by the hour right now. She is moving to Mexico City. Joining us now, Emery Horton, traveling with the president, our Bloomberg Washington correspondent. I'm going to cut to the chase, Anne-Marie, and decide that the sweat over immigration, the sweat over migrants and all that is local. And what the people of Texas or Arizona would say is, President Biden, you're from Delaware, where on one study they had a count of 30,000 unauthorized immigrants, and Texas had 1.6 million. How does this president deal with the local focus of this issue of immigration?
Well, immigration will be top of the agenda as the president meets with Andres Manuel Lopez Obrador, the Mexican leader, known very much so locally as AMLO, as well as with Canada's Justin Trudeau. But the president is on the heels of course, visiting El Paso. He got off the plane, and who was he greeted by? Governor Abbott with a handwritten letter saying that the president is $20 billion too short and 2 years too late. This has been the constant criticism of the Republican Party, that Biden has not put this as a central focus. His administration does seem to be doing that, not just with the El Paso visit, but also coming to Mexico on the heels of a new immigration plan, which I have to say is getting criticism from both sides, not just Republicans that it doesn't go far enough, but Democrats who also say it is just inhumane, and human rights groups, because under this plan, 30,000 more a month can come from 4 countries where we've seen high levels of immigration, like Venezuela, Nicaragua, Haiti. But at the same time, if they do not go through the proper channels that the U.S. administration is outlining, and they just go to the border, they will be sent out. And human rights groups say that that just undercuts asylum laws.
And this has to do with the extension of Title 42, the controversial law that was put into place under former President Trump, and the question of who to expel. There is an issue of the need for workers, and I do wonder how much that is sort of in the conversations that President Biden is talking about with his co-parts from Mexico and from Canada. How much is that a focus?
Well, it is a big focus because you've had the top 3 business communities from Canada, from Mexico, from the United States putting out a statement saying that this is what we actually need in terms of also seeing the electrification of the grid. When you want electric vehicles, so much of these components are coming from Mexico. When you think of a critical resource, a raw material like lithium that really China has the control over in terms of the global stockpile, some of that can come from Canada. So you have these groups coming out and say, we need to move past some disputes. Part of the trade agreement, the USMCA, to work out. Huge on the agenda is going to be an energy dispute between the United States and Mexico. Also, when it comes to electricity, Canada has taken issue with it. They say that AMLO has these nationalist provisions on the energy policies in Mexico. There's also potentially protectionist issues with the dairy industry in Canada. So these are disputes that are going to come up. When you look at trade and potentially the workers that could be needed amongst these 3 countries, it is huge. And trade specifically, I read it was about $3 million worth of goods a minute that is being traded between North America, Canada, and Mexico. Lisa, I know you asked about employment. That is going to be more of the immigration story between all these 3 countries, but a lot of that also has to do with the fact that these 3 countries are so intertwined when it comes to their economies.
And possibly more so, Anne-Marie, how much is the discussion moving toward nearshoring or friendshoring, some of the questions that people have to move some of the trade away from the Pacific Rim?
It is huge. Mexico has really taken a bite out of this idea of nearshoring. The fact that the United States wants to also diversify company supply chains away from Asia. And Mexico feels like they are in a top position to do that, especially when it comes to components for, I said, like automobiles, but also last year alone, boats were up 266% going from Mexico to the United States. And all this has to do with nearshoring. This is something Mexico wants to bring at the top of the agenda because they think this is a place where they can become more of a top spot for American businesses that would normally look to Asian markets.
Emery, I want to talk about the border. And this is, I think for all of our listeners and viewers, the thing of most interest. And maybe it's the 23rd Congressional District, or maybe it's how well Mr. Biden did in the election against Mr. Trump on the border. Are the Republicans making inroads Is Mr. Abbott making inroads on the border as we move to the next election?
Well, let's say that Republicans at the moment, in terms of, they've been very critical of the Biden administration, but they've also said they are happy that he's finally went to the border. This is the first time the president has visited the border of his administration. I believe the last time the president was there when he was campaigning at one point, though he did say send, of course, Vice President Kamala Harris. So the Republicans say that he made inroads by going, but again, they say it's too short and it doesn't go far enough. And they think that this administration needs to go further and needs to be more of a hardline administration, a la going back to some of the Trump-era policies that the Biden administration, many of them were scrapped on day one. Also, talking about, obviously, over the weekend, there was big news in Congress. We finally have a Speaker of the House, Kevin McCarthy. One of their first agenda items of the Republicans of the House is to potentially impeach Homeland Security Secretary Alejandro Mayorkas. So this is going to be a huge fight going into 2023, and so much of it has to do with also the presidential election of 2024, because for Republicans, this is ground zero and issue number one when they are campaigning.
AMH, great work. We'll catch up with you in the next hour. Looking forward to it. Anne-Marie Jourdain there from Mexico City. We have a Speaker of the House, and Lisa, I imagine in a couple of months we'll be talking about exactly what you want to talk about, which is the debt ceiling risk around all of this. The example of the last week or so really underscoring the fact that we've got division between parties and division within parties, which is going to make it very, very difficult later this year to come to an agreement.
Did you read all of some of the provisions that were put in there to weaken Kevin McCarthy for him to win, what was it, the 15th vote, the 14th vote, in order to become Speaker of the House? Basically, anyone can upend his leadership in just one vote. So there's this question. We don't even know when the debt ceiling debate will really come to a fore. Some projections have said July is when we'll run out of money under the current projections, but others say probably sooner than that. So where is the leadership to get some sort of deal done, given how weakened Kevin McCarthy is?
Goldman put out a note at the end of last year, Tom, and indicated that at the earliest July, at the latest maybe October.
Yeah.
So crunch time is going deeper into summer.
It's crunch time's there, and to Lisa's point, I've been busting her chops on this, but actually, I think she's been dead on about this time is different. We've heard that before, but simply this time is different after the concessions the Speaker gave.
Is the market response to it any different?
No.
Typically, we buy treasuries when the risk rises.
Could change on a dime. Yeah.
Well, if you actually, that note from Goldman that you're talking about pointed out that perhaps we won't see the move in treasuries, that perhaps where we'll see this is in growth, and that growth will get impeded as uncertainty starts to bleed into spending programs and into public programs that need to be financed on an ongoing basis. And so it might not be such a dramatic move, but could progressively have some sort of weakening factor over time.
I think the question remains, when do you start caring about it? I'll have this conversation with a couple of investors later, and I'll say the same thing. When do you start caring about it? I will care about it, just not right now.
Exactly, because right now people are just exhausted by it.
Totally.
I grew up with some of this in my household as a kid, and I'm not going to mince words. It's a moral crusade for these conservatives. They're going to, it's almost a Calvinistic thing. It's like being a Red Sox fan. There's a religion to it.
2011 repeat?
I'm not willing to predict that, but I'm going to say it is a moral crusade. It's a moral crusade for a group of people now holding the Speaker up, supporting him.
Equity futures right now positive 1/3% on the S&P 500. In the next hour, coming up in about 5 or 10 minutes actually, we'll catch up with Mike Dada, macro strategist at MKM Partners and chief economist as well. Futures up, yields higher by 4 basis points on a US 10-year. Your 10-year yield this morning at 360. Your 2-year up about 3 basis points. Your 2-year yield 4.27.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Lisa singing Keisha.
There's a whole backstory. Hold on.
You know, I watched some football, American football yesterday.
Sure, okay.
The Tots weren't on, so I watched the Lions, Packers, and all that.
How did that work out?
I was going to stay up way too late and had, the marginal beverage, and it was great. But we should have like they do, where like they go to the Burger King ad and they still show, what we're doing. I mean, it's great. It's like the Bramo cam.
When the players are getting ready for the game and you go to a commercial, but you let the sport
same
play.
with us.
But then you wouldn't be able to hear Lisa sing. You don't have the audio.
You wouldn't need it.
You want the
You just
audio.
see chaos, things throwing, and then all of a sudden, welcome back
It's
to
usually
Bloomberg
you
Surveillance.
throwing things at us anyway.
Oh, yeah, that's right.
The futures on the S&P
This is
positive by a third of 1%. On the Nasdaq up also by a third of 1%. Really strong gains to close out last week on Friday, up by more than 2% on the S&P for a weekly gain. Snapping a weekly losing streak on the S&P 500, a weekly gain of 1.5%. Actually, the biggest weekly gain going back to late November. You can thank not so much the payrolls report, but thank a sub-50 services ISM that we can discuss in just a moment. In the bond market, that meant yields dropped like a stone by more than 20 basis points at the front end. Your 2-year 4.2744, trying to bounce back this morning by about 2 or 3 basis points. Just to round things out in foreign exchange for you, euro dollar. It's going to be interesting to see Chairman Powell with the Riksbank tomorrow, talking about all things central bank independence, Sweden, and maybe we get a little bit of ECB in the mix as well, Tom.
You're selling it. You're selling euro.
106.80, up by a third of 1% on that currency pair.
When's inflation? Wednesday? Is it Inflation Wednesday?
No, I think isn't it CPI Thursday?
CPI Thursday.
Yeah,
okay.
and then JP Morgan on Friday,
With
Chairman Powell
claims,
tomorrow.
okay.
Let's get to this quote of Mike Wilson,
Please.
Morgan Stanley, this morning. It's 3,900 an easy sell. This is what he has to say this morning over at Morgan Stanley, the chief equity strategist. He led with this. With both sell and buy side consensus so aligned, and you're familiar with what that is right now, it is a big dip in the front half and a rip in the second half. Everyone is starting to wonder how this view could be wrong. Mike goes on to say, we think it's in the magnitude of the move lower, led by much weaker earnings and a Fed committed to fighting inflation, making 3,900 an easy sale, Tom. That's the message from Morgan Stanley coming into this week.
Cautious messages, other people pushing against that and certainly pushing against it internationally, as we heard from Lori Calvasina.
Sure.
And in small and mid-cap space as well. Let's link all this together. We can do that with Michael Darda. He's been a wonderful supporter of what we've done for years. Chief economist, macro strategist at MKM Partners. Michael, I want to do a 60,000-foot question. How linked is the economy to the markets right now? Are they two separate entities, as some are telling us, or is there a tight linkage?
Thanks for having me on, Tom. There's a tight linkage, but it's nuanced. If we think about last year, what happened? The economy was growing, except interest rates were shooting up dramatically, so that compressed valuations. I think the challenge for the stock market this year is really going to be on the earnings side. We know growth is slowing. I mean, that's frankly not even debatable at this point. But if we tip into a recession, you could have a fair amount of earnings weakness. Typically forward earnings estimates are 25 to 30% above actual realized earnings at business cycle peaks. So In the very short term, a falling rate structure will lift stocks. We saw that last Friday. But the earnings have to be there at the end of the day. And if that doesn't happen, the stock market's going to run into trouble this year.
Michael Dart, our surveillance research shows that 99.825% of our people are indexed up. Is this a year where being selective and active management really, really matters?
Yeah, I think this is going to be a volatile, challenging year for the equity market. If you're indexed up as a retail investor and you're in it for the long haul, then don't even worry about what we're saying. You just have to ride it out. But if you're going to be benchmarked year to year, quarter to quarter, then I think it is going to require some foresight in maneuvering and understanding where we are in the business cycle.
I want to go back to that Mike Wilson quote that John was reading. I think it's very interesting, this question around the commitment the Fed has to fighting inflation paired with the move that we saw on Friday. This question of softer than expected, let that front end rip, yields lower, bond price higher. Would this be a move that you would sell because you don't see the Fed letting up in its fight inflation, even with softer than expected data on the wage front and on the services side?
Yeah, that's exactly right. It's interesting. So the Fed is actually not data dependent here. They're path dependent. They've essentially chosen a policy rate at or just above 5%. And the goal is to get there and then hold that level in place for an indefinite period of time, most likely, the balance of this year, unless the economy crashes or financial markets crack, in order to be assured that inflation is going to come down and stay down. That is not a setup for a soft landing, in my judgment.
So what do you expect to hear from Fed Chair Jay Powell? Does it matter? Because at this point, do the words not even really make an impact on markets that are going their own way?
Yeah, I think they matter in the sense that the Fed is really focused on some of the stickier measures of inflation. I mean, we did see markets respond favorably to the soft wage print, but the Fed's also focused on service sector inflation, which tends to lag the business cycle. It's a lagging indicator. And so inflation's going to be coming down this year. I think there will be good news there, just simply based on the lagged impact of the tightening the Fed has already done. But if they're really focused on slow-moving variables, then you have a setup for the Fed to over-tighten monetary policy and a recession to ensue. And that is the direct message of the Treasury yield curve. We're inverted now on every measure. The policy rate is above the 2-year yield now, all the way out. And a sustained, deep yield curve inversion is not a soft landing story. So it's kind of interesting that, Wall Street strategists were tripping over themselves on Friday to declare the soft landing based on a one-day stock market rally. But I think if you read the credit markets and their historical forward-looking power, I think we have to be concerned about that story and more braced for a downturn this year. And it may not be short and shallow. If the Fed wants to go to restrictive and hold, I mean, that's sort of the definition of how you could get into a deeper downturn than what most people are talking about with this short and shallow business.
Hey, Mike, let's work through the data first. Let's talk about the sustainability of what we saw on Friday in the labour market report. Do you think it's sustainable to expect wage growth to back off with unemployment down at 3.5% and not climbing higher?
Yeah, it's a good question. I mean, those wage numbers tend to be pretty volatile, but there were some other interesting aspects of the report. One is that you have aggregate hours worked down 2 months in a row on a seasonally adjusted basis. And so typically before you end up with a lot of layoffs, hours worked are cut back. So it seems like that, that's happening now. You also have temporary help payrolls down 5 consecutive months. That's actually a leading indicator for overall job creation. And so I do think we are seeing signs, and you mentioned the ISM Services Index as well, plunging to a level that is usually, only one time in its history have we seen it at current levels without a recession unfolding. So I think, there is accumulating evidence of a slowdown, and that's what the Fed wants. They want to go to restrictive and hold, so growth falls below trend, and a negative output gap is created. I mean, that's the intended policy, and that is a policy that essentially describes a recession. So that's just where we are. It's, it's not a super positive message, but, sometimes it's necessary to deliver it.
Well, let's finish up with how Chairman Powell might acknowledge that tomorrow when we hear from him. There is a Q&A session, so there's opportunity to go in any direction here, Mike. As you know, without getting too deep into the Fed speak weeds, it's all about emphasis. And I just wonder if the emphasis will be on we're not sufficiently restrictive yet, or if the emphasis will be on we're getting closer to being sufficiently restrictive.
Yeah, I think definitely. I mean, the markets know they're getting closer. Essentially, have priced in terminal rate around 5%. A lot of the FOMC officials have sort of said that is their figure. And so I think Powell is just going to reinforce this idea that they're slowing down now in terms of the magnitude of the rate rises, but they're not ready to stop yet. And so they really want to get to a level that squeezes the life out of lagging indicators of inflation. And that's what financial markets and the business cycle are up against this year.
Mike, this was awesome. Thank you, buddy. Mike Dada there of MChem Partners. Just picking up on a weakness in the jobs report on Friday, including a reduction in house work, throwing that in and stirring up a toxic brew. We haven't mentioned that for a while, have we? Sub-50 ISM, manufacturing and services.
I'm glad you bring it up. Let's go there. And
pretty negative stuff from Mike Dada there.
It is. That was incredibly
negative. That was the gloom that's been out there for 1 week, 2 weeks, 3 weeks, or whatever. And post the jobs day, you wonder, does it carry into this week? And I think I'm sorry, it all hinges on Inflation Thursday.
Inflation Thursday.
I'm sorry. I mean, they could cut either way. I don't have a strong opinion. It's not for me to state it, but Inflation Thursday really, really matters.
Well, you can cut up the hiking cycle 3 ways. One is the size of each move every meeting. The other is just the length of the hiking cycle, and then the duration you remain at the terminal rate. So let's deal with the first point first. Are we going to get that step down again to a 25 basis point hike in early February, Lisa, based on the data we've seen so far?
Well, we heard that from Randy Krasner of the University of Chicago's Booth School on Friday, because he was basically saying this gives them the leeway to buy insurance. That's how he characterized it. Whether or not that will make it a lower high that they end up on is a very other question. And you've got this rhetoric with a lot of people, including Michael Darda, saying they still have to go pretty far, and they are still committed to that.
I thought the note from Ellen Zettner of Morgan Stanley going into the weekend was pretty interesting on this front. They're looking for that 25 basis point move off the back of some of the data we've seen, but they think the overall labour market resiliency may introduce the risk or raise the risk that you extend the hiking cycle. So maybe you drop down to 25s, Tom, but ultimately if the labour market remains as resilient as it has been, and that's their view and maybe not yours at home listening to this, but Tom, ultimately there is the risk there that you extend the hiking cycle.
Yes, that is the risk that I think a lot of people have. And there's people that say we're a long ways from that. I would point out to your scenarios, I'm less worried about 25, 50 and all that. But as Mr. Darda said, the length of time that we stay at a certain level, and this harkens back. We're not saying Happy New Year today, right?
No, we're done.
Alan Blinder, in his essay in the Wall Street Journal, and I believe it was Friday, maybe Thursday, makes clear, he said Happy New Year, and he said, look, inflation is falling dramatically. That's from the former vice chairman of the Fed, and that's the metric we have to look at, and that goes back to this Thursday.
Well, you've touched on the heart of the debate coming into 2023.